Good morning and welcome to the UAN 2024 Year-End Update presented today by myself, Lauren Hinthorn, my colleagues John Morgan, Bob Walter, and Alex Komorowski. This year our theme is trivia. Each one of the presenters chose a trivia topic related to Ohio. And I don't know about you, but when I think about Ohio, I think about all the wildlife we have. I live in Southeast Ohio in Marietta. I live in town and my yard is visited by tons of wildlife every night. One night we saw 6 skunks that just happened to spend the summer hanging out at our house. So my first trivia question is, what do you call a group of skunks? And new this year, we do have polling options, so you guys can choose your answers live. All right, so the answer to what do you call a group of skunks is surf it. So it looks like 19.6% of you got that correct. And then just a little extra trivia, a male skunk is a buck, a female is a doe, and young skunks are kits. Okay, so moving on, this slide may look a little overwhelming, but this is a nice flow chart of what you can expect from the year-end process. We will go over each one of these boxes in more detail throughout the presentation, but just to touch on a few, you will start by downloading version 2025.1 when it is released and opening temporary mode. In temporary mode, you will have the ability to work in 2024 or 2025. You will be able to complete 2024 transactions as they trickle in while keeping up with your day-to-day 2025 transactions. We will be discussing each one of these boxes throughout the day. For questions, some of the questions that you send in will be answered when you see the question slide. Others will be answered individually. If you think your question may be entity specific, you're welcome to call into the UAN support line and ask one of our support staff for more details. Other resources include the year-end best practices that you received today and the year-end procedures manual that will be released with 2025.1. In addition, you will also have access to the recorded webinar by going to our UAN link website. I've mentioned version 2025 a few times now. This will be sent to you by email this week. If you do not see it by the end of the week, make sure to check your spam folder. If it's still not there, give us a call on the support line and we can send it again, or let you know if there were any unforeseen delays with the release. In order to download, you must be on version 2024.2. You can look at the bottom right corner of your UAN screen to see what version you are on. If you are not on 2024.2, you will need to call or email UAN support to get the download instructions. You will want to install 2025.1 as soon as possible. All UAN software updates will have an overview describing changes in the software and can be found on the UAN link website and on your computer under Software 2025.1. After you install 2025.1, you will have a copy of the year-end best practices and the year-end procedure manual on your UAN computer desktop. This can be located by clicking your UAN tools icon on your desktop, then double-clicking version documentation. This information will also be on the UAN link website. The best practices document we provided to you today is just a brief overview of the information you will need to close the year. More detailed information is located in the year-end procedures manual. This is a large document, but if you use your table of contents, you should be able to find the information you are looking for. A helpful tip to remember when you start working on the year-end checklist is that any of the start areas can be completed as soon as you download 2025.1. These items are marked with a star both in UAN and in the best practices. We will be discussing each of these items today. Using the year-end best practices as a guide will help you with the process. We recommend that you do not skip around in the document because it could cause you to generate reports with incorrect information. In UAN, you are able to print 1096s and 1099s. UAN standard layout meets the IRS required guidelines. Some forms that you purchase, even if they are even if they state they are IRS certified or IRS approved, may not line up exactly with the UAN format. You will be able to customize the layout in UAN to get them to print correctly. Instructions on how to customize the layout can be found in the Year-End Procedures Manual. For 1099s, you will need to purchase the form for laser printers. Free forms from the IRS will likely not work, and carbonless forms will also not work well in UAN printers. Only 1099 forms for laser printers are recommended. When you close 2024, all 2017 prior year data will be purged from the UAN software. If you do not have the printed records from 2017, you should print those reports before closing 2024. The Year-End Procedures Manual discusses how to retrieve prior year reports. On our UAN Link website, there are several housekeeping videos that can help you prepare for closing the year. These touch on things that should be taken care of before you start the closing process. Do not wait until the last minute to try to find and correct errors. These are things that you can start working on now. The Social Security Administration now requires you to electronically file if you have more than 10 W-2s. If you do not already have a login for the Social Security Administration Business Services online website, also known as BSO, you will want to register now. This process can take a significant amount of time. Unfortunately, UAN support cannot assist you with the Social Security Administration BSO website, the registration process, or with acquiring your BSO number, but the UAN system can generate the file that you will upload. We will discuss how to create the file later today. The IRS has a new e-filing system for 1095s and 1094s. This will not impact most of you, but if you know you will have a 1095 or a 1094, you will need to apply for an IRS TCC code specifically for 1095s and 1094 files through the AIR system. There will be additional steps provided in the payroll manual when version 2025.1 is released. You will apply for the AIR TCC code on the IRS website. And again, this will only apply to a small number of UAN clients. So if you do not have any 1095s or 1094s for 2024, you do not need the TCC code for the AIR system. Last year, the IRS required e-filing for entities that have a combined total of 10 or more W-2s, 1099s, 1095s, and 1094s. This is still in effect. UAN is set up to create the file that you will submit to the IRS. You will be required to have a separate TCC code for the FIRE system. The IRS has other systems, but they are not compatible with UAN files. Applying for the FIRE TCC code with the IRS can take several weeks to complete. If you meet the threshold and you have not applied for the TCC code for the FIRE system, you should do that as soon as possible. We will discuss how to create a file later in this presentation. More e-filing updates. Ohio requires all W-2s to be e-filed through the Ohio Business Gateway. More information will be provided later. There are also new e-filing requirements for RETA and CCA. UAN provides the means for you to create the file, but you must review the RETA and CCA requirements to determine what is needed for your entity. This may not apply to all entities, so reviewing the RETA and CCA website will help you determine if your entity needs to file and what information needs to be added into UAN. This only applies if any of your local taxes are collected by one of these agencies. There will be more information on where to add this information and how to create the file later in the presentation. Another big change for this year is that you will no longer file OCBOA through UAN. This will only affect about 40 UAN clients, so there's a good chance that those of you here today will not be impacted. If you are unsure of how you file, you will want to reach out to audit or look in UAN to see how your entity has filed in previous years. If you regularly file OCBOA, you will now see a green check mark appear in UAN as soon as you select OCBOA. You will need to request an opt-out code for the Hinkle system through your AOS eServices account before you are able to close your year in UAN. Local Government Services has added in one new appropriation object code to the AOS chart of accounts. Once version 2025.1 is installed, users can use the new object code in both 2024 and 2025 for internet and cable costs. Also included in the 2025.1 overview will be an update to the EFT pay stub email issues. The update will be a much easier solution for all entities, and John will be giving a more in-depth update about this later.
All right, we already mentioned a few times, and there's one squirrel jumping. I hope he makes it. You can get your version 2025.1 disk, or you can get it by download. We'll be mailing out the downloads later this week or early next week. I mean, mailing out the disks. The download will go out by the end of this week. It will be available for you to download. So be looking for that. If you don't see a notice by that in your email at the end of this week, then go ahead and check your inbox or give us a call. Now, those who've been choosing the download option in the profile has grown quite a bit over the past year, and we sent out a notice earlier this year saying, hey, you know, if you haven't really made a choice and it defaults to one or the other, we're going to make it default to download. So about 95% of our customers are set for us to send an email with a download link and instructions for that. Disk mailing, if you have a replacement, often disks get lost or damaged in the mail, unfortunately, nowadays. And so if your disk get lost or damaged, then go ahead and call in or send an email request. Make sure you include your 4-digit ID and confirm your mailing address, if that's the case for the few of you who are still requesting a disk for the installation. And we will be sure, whoops, yeah, there's our little slide. We will be sure to send you a replacement disk by snail mail. I hope you enjoy the wait for that. I know a lot of you do have, I mean, a few of you do have some pretty slow internet, but if you can get to a faster internet connection, we encourage you to switch to download. So if the disk does get damaged, give us a call. We could try the download first. It really does, if you can get to a faster internet, it really saves everyone a lot of time. So go ahead and we will be happy to send you the instructions if you're one of those folks getting a disk and it happens to be damaged. Well, even if the disk works, you might get angry like this guy because of installation problems. And I understand how that is when something, software doesn't install right, and you get those error messages you don't understand. They're kind of cryptic and odd. And don't let that get you too tied up in knots like this guy. You want to call UN support, but first, please try rereading the instructions. We do include instructions with the link or the disk. Most problems can be resolved by reading the instructions. I happen to be involved in some of the writing those instructions, and I know it's in there. So here's a couple of examples of that. What's the UN installer password? We get that a lot throughout the day when you have a new version update. And this is kind of, well, I got a little hint for you. It's in the instructions, but I'll tell you. This is fiscal officer, exactly like that. You would type it in, and a lot of people ask, why do we need to type in capital F, capital O, fiscal officer, when we're installing the program? Well, that's kind of like an extra security precaution so you don't download something that is malicious inadvertently. So for instance, it's, I mean, this is similar to when you go to a website and ask you to click, are you a robot or are you human? and you click there to confirm you're not a robot. So same idea, prevents you from downloading something on accident. And obviously you shouldn't download our software updates. The second most common question about this is, what if the install does not start automatically? And there are a lot of things we can't necessarily control with that, so there occasionally that will happen. It's in the instructions. I'm not going to tell you this time. Just go ahead and look in the instructions. Oh, but if you look at me with those puppy dog eyes, I guess I'll give you the answer now. Yes, the answer to the question is, what if it does not install automatically? You go put in the disk, for instance, and it says it's going to start running and bring up an installation screen. Well, then if it doesn't do that when you got the disk in, first thing to try is to click on the File Explorer folder. Most people are familiar with that in Windows now. If you're not, it's that yellow shortcut on your taskbar in Windows. If you open that up, it's going to open up a window. This is kind of a picture of that. On the side panel of the window, you want to find this PC on your computer. It might be labeled main PC. And then you want to click on that to expand it. And that should show you on the right side of the window your devices and drives. And it will always show you your C drive, that's your hard drive, main drive of your computer. And then if you have a disk and you've plugged in your external disk drive, it will show you the DVD drive on the right. Now it might be renamed something other than DVD. It might be renamed, hopefully, UEN install 2025.1. Doesn't always do that, but go ahead and double click on that DVD drive. And that'll open up another window with not much in it. What throws people off is they often click on that install folder because that kind of makes sense intuitively, but really what you would do if it doesn't automatically start is double click this setup file, and that's going to get it rolling for you. It'll bring up an installation screen. If you're like most of our customers and you download from the internet, there's a process of downloading. The instructions walk you through the steps. But again, it doesn't necessarily automatically bring up this installation program for you. On occasion, it will not. So you go to the same place, you click on that File Explorer, Windows File Explorer, and it will open up a panel like this, or a window like this. Instead of going to any drive, you go to the Downloads folder. And in the Downloads folder, you will find that 2025.1 version update folder in your among many other things, most likely. If you're like me or most people, there's lots of stuff in that download folder. So look for the 2025.1 in the download folder on your computer under this PC or main PC. And again, it looks just like with the disk. It will have a setup exe file like this. You double click on that to get it rolling. Once you've installed it, then you can move on. We've got a little extra slide there. You can move on as long as you've actually installed it. We do get a number of calls every version release saying, hey, I want to move on to this or that, and I installed it and everything went great. Well, it's easy to miss an error message and click it closed. You got to check after you finish with the installation, check the login screen like this, and it should show version 2025.1. But if you're a little bit confused like this guy, you're saying, well, I thought that would open temporary mode after I logged in, and I don't see anything about the new year in here. Well, that is a common mistake, again, in the instructions, but 2025 will not automatically open or unlock temporary 2025. I said that wrong. Let me rephrase that. You must open temporary mode after installing version 2025.1. So it's not going to automatically open. Some fiscal officers, for a variety of reasons, choose to save that process for later. I encourage you to unlock 2025 as soon as possible. It can't do any harm even if you're not ready to use it right away. So you go to General Maintenance, Year End, and then in that menu, Open Temporary Mode. And when you double click on that menu item, Open Temporary Mode, well, it's going to bring up this weird message. Why I want to open temporary mode and I got a thing about withholdings. What's up with that? For everyone, it brings up this weird message. And this is just a once a year opportunity that you have to edit your default withholdings that are specific to your township, village, or library. And the reason this is an opportunity is because in the software, if you look at my example of my fake township here at Buckeye, I've got a number of local taxes, I've got insurance, some miscellaneous withholdings. You might have union dues, maybe some child support or other garnishments. And it's possible that you or a previous fiscal officer, that you inherited this from in years, had misspelled the default withholding wage, or withholding name. Well, unfortunately, because of the nature of how things are linked to this, you can't really edit that default throughout the year. You can edit it at the employee level. So let's say if this, I don't know, the cancer and disability, that's really actually was typed in wrong and it should be only disability insurance for that particular purpose. Well, you kind of have to live with that and edit that to just disability on every person that you add this withholding to. A little bit of a nuisance. So this gives you the opportunity to correct any errors like that, or if you just have something that naturally makes sense that you want to change the name to be something more specific, then you can do that now. So I encourage you to review those closely, make sure if you, in case you have anything to edit, to go ahead and take care of those edits. You can always cancel this if you're not ready yet, then come back, open temporary mode, and it'll come right back up. You have to save it to continue. So click on that save button, and that'll just move you on to the temporary mode opening process. Sometimes it takes a little bit of crunching the numbers in the background, but then you'll get this message saying, hey, UEN is now in temporary mode. Log in again to continue. So it says log in again to continue because it's going to knock you out of the UEN software, and you'll have to get back in. It's got to reset some things in the background. So you click OK, and you let it do that. And then you can log in to the screen, which looks a bit different. It says log in and pick a work, well, it says work year at the top. My slide says log in and pick a work year. It will always default to the old work year. And that's on purpose. We want this to always be something that you choose when you first go into the software. And you'll see why that's important later as we go on with the presentation, because you want to make sure that you do certain things in the correct working fiscal year while you're in temporary mode, and not, and it'll give you a big sign saying, hey, you're in temporary mode in one particular year or another. So make sure you click on, we're working through the year-end best practices, if may I remind you, and we are on page 1 at the bottom of the page. We're about to go over new year accounting procedures. So yes, we want to click on that 2025 working year and click OK to log in and work on some new year accounting procedures. This is something, once you get that version update, you open temporary mode, you can start working on things for the new year right away. Obviously, some things need to wait because of, things have to be in place, but you can, as you have time, work on this little by little. So opening the new year, closing the old is my slides acting a little bit jumpy now, so bear with me. As you work through December and January, you can go back and forth and work on one year or the other as time permits. So this is a great feature. So one of the first things, if you look at page 1 in your year-end best practices at the bottom, it lists the first 3 items you could do is potentially add a new fund, a new revenue accounts, or new appropriation accounts. Now, it's fairly rare to have to add a new fund at the beginning of the year, but some of you might have to do this. This would be something you could start setting up while you're in temporary mode. You could also add new account codes. Let's go back because, well, here we go again. Slides are getting a little jumpy here. You could also add a revenue accounts or appropriations. That's a little bit more common. Now, generally, your account codes stay the same from year to year if you're one of those new fiscal officers, but it can, and I know we've got quite a few this year, but you will have 1 or 2 account codes, like, for instance, those cable or internet accounts, the new ones that came up. Some of you may want to add that cable or internet account if that applies to your budget. So that's something you could do early on, even December, adding it for January in the new year. You can also add any vendors, new vendors that are applicable for the new year. So this might be rare for some of you. Maybe it's a routine thing and you have the regular vendors. But if you have planning any new purchase orders for January, you can add in the vendor information now. Go ahead and collect any information you have for that vendor and enter it in. And so there's your opportunity to get an early start on that. If you turn the page in the best practices, and let me tell you how to get to that vendor screen. A lot of the new fiscal officers are unfamiliar with the general menu. So we place our vendors not in accounting, not in payroll, but in a general menu because they work in both areas or may be applicable in either one. So a little bit off the beaten path, you go to general, maintenance, and then vendor payees. And that's where you'd add any new vendors or make any edits if needed be, like the address of a vendor that might have changed their shipping location. Vendor payees. All right. So this prepares us, if we have new revenue accounts, new appropriation accounts, or even if you don't, if you're just kind of reviewing that information, this prepares us for really the real treat with temporary mode and having access to 2025 when you're still in December, is that you can, as you have time, prepare the numbers, enter in your revenue and your appropriation budget. Let me go back. This keeps jumping forward on me. A little technical problem I'll let our staff know about. But you can prepare your revenue and appropriation budget for the new year. Although this next slide, let me go ahead and jump to that. You got to make sure that you have your numbers organized. So if you look at the top of page 2, if you turn the page in the best practices, you'll see that adding revenue budgets and adding appropriation budgets has a star next to it. And the star is a little indication from us. This is something that you can start preparing right now, even if when you're in December. You can do that early. And like I said, this keeps jumping, so I'll move back. So yes, let's see. Sorry about that. So you can start preparing the information for that. You can get, and what I'm going to show you now is not in the year-end best practices. It's a little side note. See if I can get my screen in the right place now. Technical difficulties. All right. is not pushing it live. Let's see. Okay, so what you should see now on your screen is that you can use a financial worksheet from your tax budget submission. Now, if you're a new fiscal officer and you have not ever worked with our optional budget software for your tax budget, then you may want to disregard this. There is a bit of a learning curve on this. If it wasn't prepared back in June or July, most counties, a little background here, most counties in Ohio require you to submit a projected budget sometime in June or July for the upcoming year. And so we provide this optional software under Budget Transactions Financial Worksheets where you can kind of prepare that in a format, and most counties will accept that format from you that UN produces. So it's a nice convenient thing. You can also take advantage of that now for a different purpose. You can print that out or export it to an Excel file in which you can, it'll make it easier for you to kind of put the numbers together outside of the UN software for your board to adopt temporary appropriations, or for you to sort out your numbers for your specific revenue budget account codes. So most of you have done a lot of this work already back in June, July 2024, and you can just take advantage of this worksheet in order to have a lot of that work done already for you. So that you'll find that under Budget Transactions, again, Financial Worksheets. In our fake township here, we've labeled it 2025 budget. I don't know what you or your predecessor may have labeled it, but look for something like that. If you don't see it, most likely you weren't using this. Again, it's optional. Your township or village may have used a different method of putting together your projected tax budget for 2025 back in June or July. All right, so what I'm encouraging you to do, if you do have it though and have done the work with this, is to print it out and include the account code, just something you wouldn't normally include for your county auditor in most cases. But it's great for yourself to include this when you print it, or if you use the export button to export it to an Excel and save it in Excel format. Then you've got that all laid out on an Excel spreadsheet. You can modify that spreadsheet to prepare something, in the case of the temporary appropriations, in a format that your board can use. So we'll start though with revenue budgets. You can start entering in your revenue budgets once you get your numbers in order. Enter in your revenue budget for 2025, even while it's in December. Remember, we're logged in to work year 2025. And you would do that under Accounting, Maintenance, Revenue Budgets. Now, what we're talking about here is you're going to base this on your official certificate of estimated resources, because here in December, that's all you got. No one, to my knowledge, would have, it wouldn't make sense to have the amended certificate of estimated resources for 2025. For you new fiscal officers, you might be thinking, well, what are you talking about? I have an amended certificate. Well, for 2025's fiscal year, you have one, and should have one for 2024. But for 2025, at this point, you should only have the official certificate of estimated resources. And so you can enter in your revenue budget for the taxes and other sources, the money that you expect to receive in the new year. You can enter that in right here under revenue budgets. It'll open up if you're logged into work year 2024, it'll show your revenue budget for that year. So if you see a bunch of things listed here, you're in the wrong year. Log out and log into 2025. And then it should be a blank screen coming out here under revenue budgets. Click on that add button, and you'll get a message saying that just a simple message saying you can add one fund at a time, basically. Changes are made in a different way, which we can talk about later, but it's one fund at a time. You'll add all your information. So we're going to give you an example of adding one fund. But the main point is that this is just coming from your what you have on your official certificate, and the grand total for each fund should equal that official certificate, because you won't have amended certificate until later. So once this form opens, it's blank like this, and you need to select a fund. Go back here. So I've got my fund list. I'm going to pick one fund at a time, like the message said. I've picked a simple one here in revenues, it's gasoline tax, only 2 account codes. And there's only one, I know it's a busy screen, but there's only one data entry form, and that is your budget amount for the full year. So the magic of PowerPoint, I just filled out those 2 numbers, and in my budget, grand total for the revenue is totaled up in the bottom left-hand corner, and it will also total up my projected beginning of the year balance to give me my resources available, kind of a work in progress at this point, for 2025 until we actually finish the year up for 2024. It's a work in progress. I want to put in an effective date, and since this is based on the official certificate of estimated resources, my date should be January 1st, 2025. That's what I have on hand right now as my official certificate. And so it's the first of the year. That's what this is effective for. All right. Sorry about that. Little slideshow duplication there. Actually, triplication. So I will. All right, so once you get all of your revenue budgets in for each of your funds, then if you have the items in place, you can move on to temporary appropriations. Now with temporary appropriations, we're talking about the first quarter, and your board should really adopt your temporary appropriations by the end of December. You could adopt it even earlier. You may have that done already in November, but it should be done by the end of December. And temporary appropriations are take effect January 1st. So the reason you should adopt these is before the year is because starting January 1st, if you have let's say if you have any like facility that you have to pay electric or gas bills on, well, you start using that electric and gas in January 1st. And so you should have, even though you don't have an invoice for January's electric and gas or whatever the expense might be, if you have people who are working or are getting a salary that covers January through the whole month, then you should have some kind of spending budget in place the first of the year. So that's the idea with having the first quarter temporary appropriations. And we'll get into that a little bit later, a little bit more about that later. But the temporary appropriations, you can enter those in now if you've got it passed and adopted by your board. Then you can go back into UEN in work year 2025 and go to accounting, maintenance, appropriation budgets. When you select appropriation budgets, then you'll open up a screen where you have to select the add button. Unlike revenue, there's just not one form that'll open. You need to make a choice here, and you want to pick temporary or permanent. Again, you should not have your permanent appropriations done before January, only temporary appropriations. Permanents are required to be you require your first amended certificate for the year to enter your permanent appropriations. So to mind the gap in between that time, before getting your amended certificate, the Ohio Revised Code, as the message states here, has the option requires you to enter the temporary appropriations. So you go to temporary appropriations, click on add temporary or appropriations, click on add temporary appropriations, and it'll bring up this form where you have to pick a fund and do one fund at a time once again. So we'll pick gas tax again, and gas tax at our township has quite a few account codes, as you can see. There's only one data entry field here, the temporary appropriations Q1 only. So this should only include your appropriation budget for those first 3 months. So I'll zip through and fill out all the amounts for my sample fund here. And then that'll total it up at the bottom. The very last field above the effective date is my final appropriations. Cannot exceed my resources, and since it's only for the first 3 months, not a problem here with gas tax. And then I'm going to put in my effective date. Since I'm doing this and the board's adopted this in December, my effective date is January 1st when they're adopted in December. Now, I keep saying that it's adopted earlier, but I recognize that some of you have a tradition of having a board meeting early in January where the board adopts the temporary appropriation. So let's say on January 2nd, you have your board meeting and adopt the temporary appropriations. Then you want this to reflect the reality on the ground. So in that case, you would wait and enter in the temporary appropriations after that meeting, and then date it. If it's January 2nd or 3rd, that's when you would date the effective date. All right, moving on to purchase orders, and where that's the last thing in this section for New Year accounting procedures is adding purchase orders. And this is a great thing about temporary mode. Now, but you can't do your purchase orders, and we do get calls about this saying, hey, I thought in temporary mode I could add purchase orders early and get that ready. Yes, I keep getting these error messages, and we find, well, the error message is you don't have any appropriations entered. Aha, well, you need to get those other things in place, revenue budget, temporary appropriations, and then you can prepare your purchase orders early. So to do that, I think most of you know where this is at. Whoops, it looks like. Go ahead and push this out. All right. You should be seeing in a few seconds here the purchase order screen if you didn't see that earlier. And the way you get to purchase orders, you go to accounting, maintenance, accounting transactions, excuse me. You all know this if you've been around for a little while. And then purchase orders, and that'll bring up this add purchase order batch area. Now we're logged into work year 2025, remember, and so we can add them even if it's December. If we got those things in place with the budget, we can start adding our purchase orders. And you know how to add by clicking the add button, but some of these you new folks have been around only for a year, or maybe you missed this last year. You can use this fancy duplicate button, and this is especially helpful around this time of year. Click on that duplicate button. If you don't want to use it after you look at it, that's fine. But once you see this, most likely you're going to want to take advantage of it. If you've got a long list of blanket certificates and purchase orders to enter in for the new year, this saves a ton of time. So here I have the duplicate form open. You do, at the top right, you do have to enter, do one type at a time. So BC regular, BC super. You pick the type you're going to work with first. You can look at the past closed purchase orders or open ones that may still be open for the old fiscal year, or you can look at both like I have. And notice how I selected a number of them. So the ones that I've selected, if you look closely, they are for 2024s. They were issued back in January 2024. And a lot of townships, villages, and libraries, you kind of have the same type of POs and BCs for the first quarter each year that you open up. And so this will allow you just to copy those into a batch screen with a new date and to make some edits to them and customize them for the new year when your needs might change just slightly. So you do have to, from the get-go, fill out the new year's issue date. For, in this case, it's a blanket certificate, so you'll need an issue date, certified date, and an expiration date. So select the BCs that you want, and then click OK to save it, and it'll save those into a batch list. If you got purchase order regulars, switch the type over to PO regular. Go ahead and put in your issue and certified date, if needed, an expiration date. And then in our case, we've got about 3 or 4 purchase orders that we want to open up right at the beginning of the year. So we're going to go ahead and select those and copy those into a batch list. Now, once again, you don't want to just add these to batch. It's not going to automatically post them, so don't worry about that. It'll put it into your purchase order transaction batch list, where you can go ahead and change it maybe with gasoline for your fuel. Gasoline prices have gone up. You might have to make edits to what you budgeted last year or you encumbered last year on your purchase orders. You might, here, let me jump back to that screen here. You might need to make edits to that. So go ahead and review it very carefully, but yeah, take advantage of this great feature. So that's one of the best things about temporary mode, I think, is preparing your purchase orders ahead of time, using the duplicate button. Let us know if you have any questions about that. But yeah, temporary mode is awesome, and I encourage you to take advantage of it for accounting. And we'll have John going over that for payroll.
All right, everyone. Whenever the new year rolls over, you think it's a nice fresh start, but just be aware that the scammers don't take the holidays off. Unfortunately, it's the new year, same scams. That's the motto of 2025 here. Phishing emails, you may have seen here recently, we had the state of Ohio be the subject of a phishing email. EFT or payment redirect fraud, that's a hot button issue. I know SIU is working diligently on a few cases for that. Malicious pop-ups. Whenever I mention malicious pop-ups, I always bring up this screen here. Something of the sort. It's, your computer is infected with computer COVID. Do not exit this page. Sounds scary. It usually pops up when you're browsing the internet. It's not as serious as it looks. They're relying on you to call the 800 number, or in our case, the 555 number down at the bottom, in order for them to gain access to your computer. I will say, though, sometimes these screens will lock your computer up. So if that does happen, give UAN support a call, and we can take you through how to force that window to close and get you back going. And then rolling right into the fact that most of these attacks now are becoming, well, quite honestly, lazier and lazier. The scammers, they're doing what are called user-initiated attacks. So these would be attacks where they're requiring you to do something in order for them to get access to your computer, much like the malicious pop-up. In and of itself, not dangerous. They're relying on you to actually call the number on the screen before any real damage can be done. Not a blanket statement. There are still bad guys out there, but just the overwhelming majority now are going to be these user-initiated types. In particular, that Win plus R attack that UAN sent out a memo for a few weeks back. If you break it down to its most simple form, it's actually requiring users to manually download malware. So that's how basic some of these attacks have gotten. So just stay on your toes. And I did mention we do have the ohio.gov. In our case, this would be considered a spear phishing email because it included some personal information. At first glance, it was actually quite convincing. We have a screenshot over to the right side. Information has been changed. So unfortunately, Brutus now has been the subject of this attack. But it was a very convincing version of a quite common scheme here. The thing to note with it, more than anything, you have to look for the very small details. So you can see it's quite small, but there's a second line under the body of the text, and it was a repeat of the line that was right above it. And there's just a few other nonsensical things. Chief of which, if you clicked on the link to update it, it took you to this website. Not a legitimate ohio.gov website. Trust me on that. It asks the user to provide their email provider and their email address along with their email password. The way these schemes work, if you did put in your email address and email password, it wouldn't give you access to anything. It gives what's called a cyclical denial. So it'll constantly deny your login, air quote deny. But what it's doing actually is harvesting all of the passwords you're putting into that password box. So it can collect tons of your passwords just with very little effort. So be aware, the state of Ohio doesn't care about your email provider, doesn't care about your email address, doesn't care about your email password. If you get an email that looks like it's from the state and it's asking for information like that, big red flag. Contact somebody, and make them aware that this attack is happening. As Lauren mentioned earlier, we do also have a big EFT email update. Finally, it will no longer have to rely on your own entity's email address to send out the EFT pay stubs. Going forward, we'll have what's called the default settings, and that's going to make the emails come from no reply at ohioauditor.gov. We do still give you the option for the custom settings if you or your IT team would like to use your own internal email address. But at this point, once this rolls out, it is entirely at your own risk. If it doesn't work, the only thing UAN support can suggest is to switch back to the default settings. So you'll see here, this is our new screen. It looks very similar. The only difference is we have a couple new radio bubbles for the outgoing email settings. We've got the use default settings. That will be that no reply at ohioauditor.gov email address. And then the custom settings, it would make available all the old settings that we used to use. And quite honestly, we've made it so easy, even a couch potato can do it. I did talk to our tech team. So many of you are aware, or if you're not surprised, you're getting new computer hardware at the beginning of 2025. Right now, we're looking at about February to March timeframe, although nothing's really been set in stone at the current moment. But while you're doing cleanup for all of your UAN information, amongst your many other hats that you wear as fiscal officer, keep in mind that it would also be a good time to start a file cleanup. Just a little peek behind the scenes, the way that the hardware transfer process works. It will copy over your C drive and your documents folder. So the less data you have on either of those, the better. The quicker it'll go, the less likelihood that the hardware transfer will fail. So start making notes of files that you can start archiving. If it's an unneeded file completely, go ahead and get rid of it. if it needs to be moved to a network drive or an external hard drive, anything like that. But just know that the smaller your C and documents folders are, the better it's going to be come hardware transfer time. All right, now we're into the meat and potatoes here. We've got the New Year payroll set up, and I live out in Union County, Ohio, Marysville to be exact. So a lot of beautiful farmland out there. But so my entire theme for my presentation is going to be the appreciation of Ohio agriculture. We'll have some trivia here in a little bit. A fun fact that actually even surprised me when I found out about it. But much like this pig, happy in his puddle of mud, temp mode makes me just that happy. It's a great utility to have. It's amazing for getting ahead with your work, but it does come with a drawback or two. In our case, you do have one other thing that you're going to have to keep track of. Like our little instructor here, Tommy the Turkey, is showing you. You'll need to make sure that you remember what work year you're in, 2024 versus 2025. And once again, that's only available after you install the 2025.1 update and open temporary mode. As far as this piece of the presentation, everything we're going to do, Tommy, take it away, will be in 2025. So I just make sure anytime you're updating New Year payroll, you're actually in the new year. It doesn't make a whole lot of sense to update New Year payroll in the previous year. So you may think you may need to add some new earnings and leaves, and while that may be the case, we'll at least show you where you would do that. So under a payroll maintenance, and then earnings and leaves here, you would click the add button, but it's not actually a common New Year activity. So this would be more to the tune of maybe you've got, I don't know, a fire department that as of January 1st is getting a whole separate new earnings, something like, let's say, a hazard pay or something of that sort, something that encompasses many employees and is new to your entity. This wouldn't be, one of your employees getting a raise. This wouldn't be, even somebody changing positions. This would strictly be a new overarching earning that would be paid that didn't exist in 2024. Now, a little more common here, and you can see Tommy's popped back up. He's gonna help us figure out how to add any new withholdings in the year. So we're going to start with payroll maintenance, and then we're going to pop on down to the withholding screen. And it'll bring up a little screen that looks like this, where you can click add, and you would add in any of your new withholdings. Maybe this is your as of January 1st, you're offering health insurance for the first time. Maybe you're replacing an existing withholding. So maybe you've changed health insurance providers with other details changing as well. You could go through this and deactivate the old. But in our case, we're going to be adding a deferred compensation non-Roth withholding. Buckeye Township, we've had an employee come to us say, yes, I would like to contribute to deferred compensation. So we're going to add that into the system, and that brings up a very good point from the get-go, selecting the correct process group. So you want to be really careful when you're selecting a process group here and make no assumptions, because some of these are considered pre-tax withholdings. You can see that A00, the cafeteria plan, that's a very powerful pre-tax withholding. B00 is still considered pre-tax, but a little less powerful. And then so on and so forth. So you want to be very careful when you're actually selecting your process group here, since it does affect how other withholdings may be calculated. For ours, we're doing deferred compensation non-Roth, B00, labeled deferred compensation non-Roth, pretty straightforward. So we can go ahead and throw that into the system. Another point when you're adding a new withholding, you may or may not even have the right payee for that particular withholding. In that case, well, what can we do? We've got our little duck friend here. What can I do if a payee's missing? Well, he comes with answers too. Every withholding needs a payee pal. That pause was for laughter. Unfortunately, I didn't hear any laughter. So we'll go into the vendor payee screens and have a look. So this would apply for both editing existing vendors, or you can use it to add a new vendor. We'll want to be careful because there's a selection that needs to be made to make that vendor available in the payroll withholding screen. So we'll go general maintenance vendor payees, the usual place. And in our case, our vendor's already available. So we've got the Ohio Public Employees Deferred Comp. We just need to make it available for our payroll withholdings. So we would be able to select that vendor and hit edit. And those red highlighted boxes, the available in, that's the section you'll need to make the change in, and then towards the bottom of that list, the payroll withholdings. If that's not checked, the vendor itself will not show up in that vendor payee dropdown in the withholding screen. Likewise, you can do the same thing if the vendor doesn't exist yet. Instead of editing your existing vendor, you'll go to General Maintenance Vendor Payees and click Add. But the same rules still apply. You would need to have the payroll withholdings checkbox selected in order for your new vendor to also show in your withholding screen. And would you look at that? The withholding and the payee, well, they're best friends forever. I don't know what kind of farm animals these are. It gets kind of weird out in rural Ohio. I'm not sure what those are, but I don't know. I'm not one to judge. So after we've added our new withholdings, or new withholding in this case, you may think, job done. Let's get on with the year end. Well, let's hold off here. This is actually a two-step process, which is actually going to be a bit of a theme for my sections here. It's always a two-step process. So basically what we've done already, we added the new withholding to the main list. This doesn't make any changes to the existing employees, doesn't make any changes to, even if there's an existing withholding on the employee that would be related, doesn't make any changes. We'll actually need to go into the employees and add the new withholding to those employees in order for it to start withholding properly. So this is the step we'll focus on next. So we're going to edit the employee and add the withholding. So let's go to payroll maintenance employees. And we're going to select Mr. Robert Build here. The screens will show you, they're going to be, if you select them and hit edit advanced, the same information should be available in the guided screen. It's a preference, but just know that the screenshots here are going to be of that advanced screen. And when you pull that up, we'll want to have a look at this withholdings tab. And then once you're there, you can click Add. And you'll be able to see that we've got the deferred compensation non-Roth available. We would set the amount, and you may be tempted to click Save. Well, let's slow down here, because one of the more common calls we get on the support line regarding new withholdings is, well, the withholding isn't withholding. Doesn't do a whole lot of good now, does it? So the step that gets missed more often than, quite honestly, anything I can think of offhand is attaching the new withholding to an earning. Probably pound for pound, besides password resets, one of the more common calls we get. It's a simple box to miss. Quite honestly, the system will let you save it without attaching it to an earning. So just be aware that you do need to go into the earnings tab when you're attaching to the employee just to make that connection, so that when you run payroll next, the withholding will actually withhold money from the employee's pay. So with it selected, you would hit save, and that should be all that's needed. Next thing we're going to cover, to the same tune, we're going to update withholding rates. So this would be any rate or amount changes that are effective as of January. And this would be, if your insurance or tax rates change, it was an election year, so if you have a tax levy to change tax rate, this would be the process that you can go through in order to update the tax rates in UAN, not just on a global default scale, but for each individual employee that it affects as well. So once again, I'm going to harp on this a little bit. Make sure you're in working year 2025, especially if you're trying to get ahead of the game and are in December. You may still have payroll to run in 2024. So if you make these changes in work year 2024, you may actually be withholding the incorrect amount for your final pays of 2024. So make sure if you're updating tax rates that you are in work year 2025 in this case. And once again, it's a two-step process. So we'll update the amount in the withholding list, and then we'll update the withholding assigned to the employees. So first things first, step one, we'll go through payroll maintenance withholdings. And let's say Buckeye Village voted to up the tax rate this year. So we'll select Buckeye Village income tax and hit edit. And it'll bring up your edit withholding screen, and down here towards the bottom, you'll see the employee share. And the old rate is 1%. The voters in November said that they wouldn't mind a 0.5% increase. So you can come in here, and through the magic of television, you can update that rate to 1.5%. But that doesn't actually change any of the existing employees' withholdings. All this changes is if you were to add this withholding to, let's say, a new employee, or maybe you had an employee move, the default amount that would pop in would be this 1.5% going forward. But to edit the folks in the past, you would need to go to the withholding editor. So this is a beautiful utility to have. It updates multiple employees in one swoop. And that's located under Payroll Maintenance Withholdings Editor. And it'll bring up a screen that looks like this. So up at the top, you've got your withholding dropdown. In our case, we're focused on the highlighted Buckeye Village income tax. And when you select any applicable withholding, all of the employees shown on this list are going to be the employees that have that particular withholding attached to them. So you're not going to see any unnecessary bulk. This would strictly be employees that currently have, in our case, the Buckeye Village income tax attached to them. So you can see here, even though we updated that default amount to 1.5, the value over here still stays at 1. So we'll do a group edit here. Up at the top, you can see by default we had the group option selected. You do also have the option to go line by line if you would like. In our case, it's a sweeping update, so we'll use this change to option down at the bottom, and we'll type in our 1.5% and select save, and the screen will refresh, and you'll see that all of the rates then update to 1.5%. So two-step process, update the default amount in the actual edit withholding screen. That changes it, so going forward, anytime you have an employee that a new employee or existing employee that adds the Buckeye Village income tax or whatever applicable tax in your case added to their profile, it's added at the correct percentage, and then this withholdings editor you can change it in here for all of the existing employees. All right, guys, let's take just a half a second break here. Let's learn about potatoes. Did you know Ohio only has 18 fewer potato farms than Idaho? So Ohio has 511 versus Idaho's 529. Pretty impressive, right? Well, okay. Idaho may have us beat on, total acreage. Idaho has 300,000 acres dedicated to potato farming, whereas Ohio only has just over 2,000 acres. So, well, it counts for something, right? All right, back to regularly scheduled programming here. That marks about the halfway point of this section for me. So just keep with it. We're about to go through a very important topic here with the skip calendars editor. It's an amazing shortcut. It's just, you have to be very careful when setting these up. So the idea behind these, think of it as you pay something monthly. I'll say 80% of the time when we see this, it'll be like a health insurance or something that's got a monthly payment, but you've got employees that have biweekly pays. So in a perfect world, if they were semi-monthly, you could withhold twice a month, half of whatever is owed, easy enough. But with biweekly, you get the curveball of the 25th and 26th pay of the year. So you have a couple of months where you actually end up with triple pay periods. So the skip calendar editor is a great way to set it up so that the withholdings are automatically skipped at the appropriate time. So it only works for the employee withholdings that have the skip option active. This isn't going to work for, let's say, local tax. Federal tax, as much as we would love to skip that, unfortunately, we're not allowed to. So it is a select few list. Typically, it's going to be related to what I would refer to as set rate or set amount withholdings, not a set rate. So a set rate would be like a tax where it's 1.5%. A set amount would be like health insurance where you withhold $25 per pay. But before we even want to start talking about actually implementing the skip calendar, let's pause and let's just lay out our 2025 pay schedule here. So you can see, we'll want to make a note. We've got our pay periods up here at the top, pay periods starting and ending dates. We've got our pay date here. And for our example, we're going to use the classic township insurance deducted twice a month. So you can see January and August, we've got our 3 pay period months. So first pays paid out on January 3rd, second on the 17th, third on the 31st. Likewise for August. So here at Buckeye Township, we like to skip the third pay. So in particular, we would be, for insurance, we would want to skip that January 31st pay, since the first, the 3rd and the 17th would have covered the full insurance bill for each employee. That doesn't necessarily have to be, set in stone. One of the other options would be, skipping the second pay. And the rationale behind that would be, if you skip the second pay, you have time to correct it. If something happened that the skip calendar didn't work as expected, or something like that, you would still have that third pay that you could still either withhold or manually skip if something does go awry. So just know that this is simply just an example that we're using. You can skip whichever of the 3 pays you would like. Little note here too, whenever you're looking at your 2025 calendar, you may want to have some helpful reminders. This came up just because we have our nice little spreadsheet here. July 4th, 2025, we have a pay date scheduled for that. If there was ever a federal holiday, I think the federal holiday counts for that, for July 4th. So you would want to make a note that an alternative pay date would be needed. because banks aren't open. Pretty much nothing's open on July 4th these days. So you'll need to approve an alternative pay for that if you are on a pay schedule like this one. So as far as accessing the skip calendar editor, you would go through payroll, maintenance, and then skip calendar editor. Pretty straightforward, right? In previous years, we have already had that biweekly skip third paycheck, the skip calendar set up. So if you have set this up in the past, you'll at least still have this option available. If you're new to this, you would need to use the add button to add it in new. But just know if you did use it in previous years, you'll be able to use your existing one. It just resets, so you can see over to the right the skip selected. It resets those to 0. So in our case, we'll select our existing skip calendar and hit edit. And that'll bring up the edit skip calendar screen. And you may be tempted, we're going to skip the third pay of January. You may be tempted to take your mouse cursor up there and hit 31st. Well, okay, let's slow down a little bit here. If you look up here in the top right, select any date within each pay period that the withholding should skip. So even though the triple pay period is related to the pay dates themselves, the skip calendar editor, it goes off of the actual pay period of the affected wage. So if we jump back to our pay schedule, you'll see that if we were to skip the 31st, well, we would actually end up skipping the wage paid out on February 14th. So if we look here, even though the pay date's the 31st, we would need to skip, well, quite honestly, anything between January 4th and 17th. Because just remember, you are selecting it as of your pay period, not your pay date. So if we pop back to our skip calendar editor, we'll move our little mouse from the 31st and we'll put it up to the 17th. So with the skip calendar editor, you can select any or quite honestly all dates in that pay period. So you would only be required to select one like this, and that affects the whole pay period. I have seen some folks where they just do the whole pay period, so they select the 4th through the 17th. I would tread lightly with that. The only reason being one misclick, and you might accidentally skip two payrolls in a row. So I keep it simple. In our case, we select the end date. You could also select the beginning date. I wouldn't worry about selecting the whole period, though. So then we'll jump down to August. Same thing. It's the 15th. We'll go with honor system on this one. I promise that's correct, so we don't have to go back to the pay schedule. And then we would click save. Please note, to apply the skip calendar editor to employees, select it and from the skip calendar list and click apply. Yep, that's right. My motto is back. It's a 2-step process. So just because we've created the calendar doesn't mean it's been applied to anything. So we need to select it from the list, and down at the bottom next to the edit button, we've got the apply button. And this will be how you actually apply this skip calendar editor to an employee's withholding. There we go. You don't have to do that twice. That was just a little hiccup there. So once you click the apply button, it'll bring up the apply skip calendar screen. So first things first, you'll need to select your frequency. I'm going to make a bold statement here. 99 times out of 100, if you're in this screen, it's regarding a biweekly pay. I'll leave that 1% available for any other inevitability, but most of the time we see this, it's related to biweekly pays. So once we select our biweekly, we'll pop down to the withholding, and you may notice that there's not really that many withholdings on the list. Well, remember that only a few withholdings can actually have the skip calendar attached to In our case, we've only got these three, our three insurances: dental, health, and life. So what do you say? Let's start with dental. We won't actually be doing all three. One's enough for demonstration purposes. So we'll select our dental insurance here, and it'll show your employees that currently have that dental insurance amount. So you would select everybody and hit save. So it's a pretty straightforward process, but there are a few tripping points. One being where you select the actual date of the pay period, not the pay date of the skipped wage, and also even just applying it to the withholdings as needed. You may set up the skip calendar editor, you forget the second step, it's like you never did it. So be diligent, make sure you're doing both steps. All right, and we've got new year, new leave. We've got our little hog wild buddy here. He's excited. He gets his lump sum leave accrual. With how excited he is, I'm going to go ahead and say he's going to use it all within the first 3 months and then complain about not having to leave for the rest of the month. But that's beside the point. Make sure you're not going hog wild adjusting leave balances. You'll need to make sure that you keep your supporting documentation. So you would do all this under payroll, utilities, leave balance adjustment. And we even give you a little friendly reminder: supporting documentation should be retained. And you may think, wow, it's just leave. Well, remember that leave does have a cash balance to it. You're paying an employee to not work. So before you make these adjustments, be very careful. Make sure that you know what you're doing, why you're doing it, and let's not become the employee's cash cow. So anytime you're doing a New Year leave adjustment, I will almost always recommend doing it through this leave balance adjustment utility. It's a great screen. One size fits all. You can make any of your leave adjustments in here. So you can see up at the top, we've got the adjust leave balance by employee or by leave. So it gives you two options. So first, we'll go for the by employee option. And this will give you your list of employees. We'll select Henry Hero here, and it'll display the individual leave balances for that particular employee. So for Henry Hero, he's got holiday, personal, sick, and vacation, quite a bit of sick time, a little bit of vacation time. He's got 28 and a half hours of vacation time. You can make all your needed adjustments in here, whether it's a use it or lose it policy, whether you do a lump sum annual accrual, anything like that. It's also great if you only have a few employees, because you can give them a little bit more one-on-one attention. We'll discuss the buy leave option here in just a moment. It's better for these big bulk changes because it'll allow you to hit multiple employees at once. So in our case, we're going to use it to, well, maybe do an annual lump sum increase. You can come in here. Maybe you grant 120 hours of leave on January 1st. You can come in here, put in the 120 hours. Maybe there was a payroll error. He didn't report 6.2 hours of leave used. You can come in here. You can deduct that. So it's a really useful utility just for evaluating and making changes to the leave balances. So if we go to the buy leave option, we're going to jump to that second radio bubble at the top. This is more what you're going to use this screen for, especially at year end where you do have these big sweeping changes that may be needed. So for our first example, we're going to have a use it or lose it policy. And that would be, for, in our case, personal leave. If it's not used by the end of the year, the employee loses it. So if we highlight here, we've got Mr. Barry deceased, our cemetery sexton. He's got a current balance of 8 hours. So, if we were able to to, or if it was time to make the adjustment, we could, put -8 in, and the revised balance becomes 0. If we do end up making that adjustment, up here in the corner, we've got our little helper here, Buckeyes Township's newest assistant. This is Peter the Pig. And Peter the Pig, very diligent with his notes. 1/1/2025, 2024 unused leave, personal leave lost per policy. Short, sweet, to the point. Always recommend give yourself a chance. In a couple of years, when someone asks a question about this, give yourself enough information to know, why you did it and where to look for information related to it. So in this case, 2024 unused leave or unused leave, and then it refers you back to the policy. But you may not actually be ready to post that yet. Seems kind of weird, but if we look back to our pay schedule, our policy actually says the employee has until the final pay period of the year. So you can see up at the top, even though it's paid January 3rd, the pay period end date's December 20th. So January 1st, you may not even necessarily be able to enforce the use it or lose it policy. So you would really need to refer back to your entity's policy regarding that particular leave. In our case, January's the time, December, not yet. Well, Mr. Ceased, in that last payroll of the year, he actually used his final 8 hours. I don't think he was quite out, hoeing the garden, being December, but, maybe Buckeye Township's in the Southern Hemisphere. We don't know. It's all make-believe and points don't matter. So as of January 3rd, he used it. So you just make sure that you're not reducing the leave balances too early based on your policy. In our case, after that January 3rd pay, if he did still have the 8 hours remaining, then we would have been entitled to removing those leaves. So now example 2 is going to be a little bit more of a real world example for how to use this by leave type. So you can see here, none of our employees have personal leave. According to Buckeye Township policies, as of the beginning of January, each employee is entitled to 24 hours of personal leave. So this is a great way to put in those increases in bulk. So our adjustments can be 24 all the way down. And it's a quick way to rapid fire off these lump sum increases. Once again, we'll want to take special note here. Gertrude the Goat, going to help us this time. Gertrude, just as diligent as Peter. 2025 personal leave granted per policy. And that's, again, perfect amount of notes. Short, sweet, to the point. That box is character limited. You can't write a novel. So do your best with it, but just give yourself a fighting chance in a few years if somebody asks why you made an adjustment. Put enough in the purpose field, and that doesn't even necessarily just apply to the leave balance adjustments. That's just good UAN life advice. Anytime you see a purpose or that type of field, just put enough information in there that you know where to look if there are any questions down there. Once we have all the fields filled out, down at the bottom, we'll click the post button, and that will apply all the leaves. So we had Gertrude up. Let's say, let's have a question about goats, shall we? When comparing 2022 to 2017, were there more, less, or about the same number of goats in 2022? It's actually more. So more goats by what is that, about 7,500? More goats in Ohio. 4,700 farms on the census claimed goats. So if you're investing in goat stock, we're on the up and up, aren't we? So I'm going to hand it over to Bob, and he will take you through the steps to close 2024.
Yes, we're taking you into steps to close 2024. But first, a little trivia once again. What is Ohio's largest squirrel? I said gray squirrel. It is not. It is the fox. That's the largest. That's actually in the squirrel family. So that pesky, sneaky fox is the answer. All right. Steps to close the fiscal year 2024 when you are ready. Calendar date, your calendar date, if you look on that, it must be on to close the year, right? To get through these steps. If you were actually to close it on this date, then the steps you'd have to actually be in January 1st at least. All right, so there's no award for filing first. None at all. So don't be like this guy thinking I'm going to be a top dog here, filing first. Don't rush it ahead. Remember, I mentioned this is a process. It's a process that you over time, and you don't want to rush it and have an incomplete return filing just to get there. You know, camping out on December 31st when the clock ticks, you're closing the year. Not a good thing. Close when you're ready and you have completed all the necessary steps to have a complete filing. And not only that, to close accurately so that you don't have any outstanding adjustments you have to do or a data entry that you need to take care of before you close the year. So don't rush it is the main theme here. No award for closing first. It's not going to help you. You can't. That's the advantage of temporary mode, is that you can take care of this stuff before. You can take care of this stuff even if you have to wait for certain things, like maybe you're waiting on the bank to get you some debt schedules. Maybe you're waiting on some information you're gathering for demographics and debt information in your checklist or notes the financial statements and preparing those outside of UEN. So that might delay you. Maybe you've got everything else done. And so temporary mode buys you that time. You can still operate in both years and you can still get what you need while you're in temporary mode. So please don't rush forward with that. All right, so the next bullet point there on page 3 is complete 2024 transactions, but there's a lot loaded in that one little 4-word sentence there, phrase. So complete 2024 transactions, so we're saying you're in January now, but you may have to post some items, maybe some electronic items, or some corrections, or some utility adjustments. You can do that in 2024 while in the new year. All right, already mentioned completing that in work year. Make sure you log in. That's at the beginning of the login screen. You log into work year 2024, 2025. Got to be real careful with that. And so you make your decision at the beginning. Like I mentioned, once you're logged in the right-hand corner, it tells you what work year in a big yellow banner, what work year you're logged into at the time. Do not post items in 2024 that will be paid in calendar year 2025. So we're about to get into this pretty soon, and this has to do with any carryover withholdings. This could be purchase orders. This could be, where I said withholdings or purchase orders related items. You don't want to try, there's a temptation, whether it's accounting or payroll, to try to push that, especially in early January, especially for newer fiscal officers. Say, oh, wow, I meant to, I rushed out December 31st and I was hoping to post that transaction so it'd show up in 2024 in December. Hey, I got this temporary mode. I can still do it. No, if it's just a check that needs to be posted, and now let's say it's January 3rd, or if it's an electronic payment that you're paying today, let's say on January 3rd, it's paid in January. That is when in the real world it's being paid. It's okay to carry that over into the new year and make the payment. And in fact, in those cases, you must really do that. It's important not to try to force it into the old year when the calendar date is in the new year. Now that's different for, say, corrections or something like that. But when you're talking about actual transactions, they belong in the calendar date where they belong, where you're actually processing them on the date, calendar date or later that you're processing. All right, a little reminder before we get into the next bullet point about carryover withholdings is that now is the time, early January, maybe late December, depending on what your schedule is, to record your final quarterly or monthly, or in some cases annual reports and payments for withholdings. Now again, we'll see there's nothing wrong with carrying those over and paying them in January, but year-end gets so busy with all this stuff. We got a day of topics to go over about this. That's real easy to kind of forget about that federal 941 fourth quarter. And I'm talking specifically the report that needs to be included, not just the payment. Local tax, a lot of local taxes in villages. Those might be annual reports, school district tax reports. Ohio Department of Taxation needs their quarterly or monthly reports. And then Job and Family Services fourth quarter wage detail needs to be processed. So you're in the new year, you've already posted all your wages. And so that part is complete because you're in the new year. You can't post a wage in the old year now that you're in the new year. So you know that you can start working on these quarterly reports, and just don't forget. Now let's talk about the third bullet point on page 3, which is verify carryover withholdings. And this is really important. This is kind of all on topic. You would do this under starting with one key report here. It's called the Withholding Summary Report, the Unpaid Withholding Summary Report, and that is a defaults to showing you unpaid. I'm not going to be able to show you that report because it's too wide of a report. It would be too much for the screen. But under Payroll Reports and Statements, Withholding Reports, you'll find it in that group. And it's the first one on the list of several reports, the Withholding Summary. And you want to do just like this guy, you want to select all of your withholdings except for OPRs and OP&F and leave the default setting to show them by original post date. So that's what we mean by the warrant check date, okay, when the employees were paid. Because for everything but that state retirement, your reporting and your liability for paying those withholdings is based on the wage check date or the electronic fund deposit date, if that's the case. And so you don't want to include OPRs because they calculate liability and the reporting required for them on a different basis. So this report, withholding summary, defaults to unpaid, and like I said, I'm not going to show you that here, but if you take a look on your computer at some point, you'll see that it's a one-page report. It shows all 12 months in a row, starting, and it starts with the prior year withholding. So on my example here, it's showing all of a whole bunch of withholdings. It's showing me this because all of those withholdings as of this point are unpaid. I paid the employee and withheld federal income tax, Medicare, dental insurance, but haven't paid the withholding related to that for some of the months. Nothing wrong with that. I pay the withholdings when they're due. So if you don't see much in here, if you're in the habit of if you have all your payroll mid-month and finish that, and then you do your withholdings later in the month of December, you might not see much here because you may have made those withholding payments already. That's okay. It's showing you the unpaid with paid withholdings here that will carry over. Either way, I should emphasize, it's okay. It's okay if you're on a schedule where you pay them really at the end of December for what's been withheld, or it's okay if you carry them over if you didn't make those payments. You pay them when they're due to each agency. Now, for OPRs and OP&F, because they want you to report the withholdings for the employees by pay period ending date, you need to switch that setting and print the withholding summary unpaid by pay period end date, and it will place withholding in the proper month on the report based on the pay period end date, because they need to keep track of when the employees earn the money, and they base it on that so they can calculate retirement benefits someday based on how much employees earn throughout various pay periods. So that's their thing, just for OPRs and OP&F. So print that separately. So let's talk about these carryover withholdings a little bit more, dig a little deeper, and this is also, the things I'm referencing here are also covered in the next points on page 3 and in the year-end procedures. Unpaid withholdings carried over and paid in 2025 will continue to report on your 2024 withholding sum report unpaid. The point of this slide is that you need to, this is a key report, but you need to understand it when you're going between years, reporting years. In UEN, the accounting and payroll reports focus on one fiscal year at a time. And so when you print the 2024 withholding sum report unpaid, for those withholdings, like in my example that I am paying in 2025, well, whenever I reprint that 2020 report, it's going to record that as if it hasn't been paid, because on the report, the as of date of the withholding summary unpaid was unpaid. Okay, it's as of December 31st. So it will perpetually, we keep 7 years of history in the software. So for the next 7 years, as of December 31st, 2024, those withholdings will remain unpaid on that report only, because that is the true reality of the state of affairs on the end of the year. Looking at it a different way, the same 2024 withholdings displayed on, when they're displayed on the 2025 withholding summary report as unpaid, they'll show up at first under unpaid prior year withholdings, the first column on that report, until they're actually paid. So you start the year off, you carry over those withholdings. If you print that report, it's going to show unpaid prior year withholdings. Once you actually pay those withholdings in, let's say, January 5th, 2025, it drops off to 0 in the prior year column, and they have been paid. I want to focus here on carryover withholdings in regards to OPRs, OP&F, Medicare, and Social Security. The employer share is unique to those 4 preset withholdings in UAN. So if you're kind of a newer fiscal officer, just to explain, but almost everyone has employees who have OPRs withheld. If you're on the OPR's regular plan, you have 10% withheld from an employee's check. So they get paid $1,000, you withhold $100 of their check. But your township, village, or library, if you're on the regular plan, covers an additional 14% of OPRs. That's the employer's share, your entity's share that you pay to OPRs in addition. Well, that employer's share is not committed or encumbered, obligated to be paid from the employee's check. And so therefore it's not encumbered when the wage is paid to the employee. Let me give an example to put sort of some meat on the bone with this. The carrier withholdings, withholding payments posted in 2025, so the wages were posted in 2024, and you're paying the withholding, let's say OPRs in 2025. Well, they're going to charge when you, let's say you pay in the first week of January, you pay that OPRs payment. It's going to charge the employee share to the 2024 carryover encumbrance of the 2024 appropriation. In other words, it's going to use the budget from the older year for the employee for that 10%. Whereas the employer share is going to use the 2025 appropriations because you're posting it, let's say, in first or second week of January. And so it's going to look for that year's budget. And that's one of the reasons why it's so important to, and why temporary mode is so great, because it gives you the opportunity to get your temporary appropriations in there early and you're ready. We do get a number of calls every year where someone says, hey, I'm trying to post my withholding payments and saying there's not enough, there's a insufficient unencumbered balance. I'm sorry, insufficient amount available for appropriations, something along those lines. You get a compliance error because you don't have a budget for the year for this employer share. And until you do get that in, it is it's going to bark at you and not let you make that withholding payment for these 4 types. And that brings us to the last point for withholdings, which is clear in this section at least, clearing unpaid withholdings. So this is a matter of debate when we first added this to best practices, whether we should include this line at all in our instructions, because it's just not a common activity and it can be a bit dangerous if you clear this out on incorrectly. So you want to be careful, kind of push against clearing out an unpaid withholding until you understand what's going on with that withholding. So be a little skeptical here. If the unpaid withholding will be paid from payroll in 2025, do not clear them. So in other words, there's nothing wrong with carrying it over. If you withheld it and it's unpaid in 2024, but it's not due until the end of January, you can pay it before it's due. Let it carry over. Just because you have this line in the middle of page 3 saying clear something out doesn't mean you need to clear it out. Only in most cases, you'll just want to pay it when it's due. Now, there are exceptions. If you made a mistake, and this may be more common with all the new fiscal officers coming in April this year. I know a lot of this has already happened already, I've discovered on the phone, is that a lot of fiscal officers started off in April, May, where they used payroll to pay their employees, but then when they came to pay OPRs or the IRS, they went and they made those payments through accounting. And then they got on the phone with me or someone, and we pointed out, hey, you know, payroll does all this work for you. Isn't this easy? You know, just use the withholding payment. And to their delight, they started making payments through the payroll software for the withholdings from then on. But what often happens is if you had me, I'd remind you. But often what happens is you forget to take care of that withholding, unpaid withholding from earlier in the year. So that's a common mistake. There are other mistakes that could happen, other maybe very unusual circumstances in which the withholding has been paid out of accounting instead of payroll. So if that's the case, then it's justified to clear it out. The key thing is payroll will keep track of that, and it can cause you problems with next year's budget if you carry over withholding that really has already been paid, and then take care of it after temporary mode is closed. You want to take care of this in work year 2024 only, right? If you need to clear it out because it's not really in the reality due to be paid, then you make sure you stay in work year 2024 to clear that out, and don't wait until the next year because that'll cause you problems. And I jumped to our the purchase order screen here, but let me jump back. So that's enough said about withholding unpaid withholdings. If you think you need to clear them, best thing to do is give us a ring at UAN if you're not absolutely sure, and just kind of run the scenario by us, and we can give you some feedback on that. The last point in this section is sort of related. It's called closing or reducing purchase orders or blanket certificates, and there's 2 bullet points below that on where to go to close or reduce. And like I said, for withholdings, also for POs and BCs, if you're going to do this, you want to start with 2024. All right, so to close, our example here is to use the purchase order utility, and I skipped over a slide here. Go back. You want to go to Accounting, Utilities, Purchase Order Utility. Normally, purchase order utilities are places where you would fix things that are broken. Not in the case with purchase order utility. It's just a way to kind of close or adjust your purchase orders. When you go to that area, it's going to give you a big list of what you've done in 2024. And at the top of the list, you can choose the type of purchase order and narrow down your list if you have a long list of different types. Or if you have a short list like our sample, you can select the status. Now we give you the example of closing 0 balance purchase orders. That's just to run through an example, but the main purpose of closing a 0 balance purchase orders is to unclutter your list, especially if you have a long list of purchase orders and blankets that you've been using throughout the year. But really, if you were not to close these, the 0 balance simply means let's say you've opened a purchase order for $1,000 earlier in the year, and then you've made payments using that purchase order all the way up to the full balance of $1,000, and you're down to 0. Well, there's nothing else to do with it. There's no need to carry that over. And UAN will automatically close the 0 balance purchase order when you close the year. So again, it's an example, but it's only necessary if you want to unclutter the purchase order utility and focus on the POs that really need to be addressed. Now, other purchase orders that you may want to close, or BCs, may have a balance, but they no longer are relevant for payments. If you had to buy a certain, a lawnmower or something from a local vendor, and that's it. You bought the lawnmower, but the purchase order was open for a couple $100 more than just in case, and it didn't cost that much. So let's say it was for $1,000 and the final payment was $800. Well, you've got a $200 available balance that you don't need to carry over into the new year, and that again would restrict your budget by that $200 in the new year. So just go ahead and close it if you're never going to use that, since it's no longer relevant. So to close purchase order BC, once you select it from the list, click on the Close Item button. Let me jump back there. Close Item is key. A lot of newer folks will click another button in that list, the same area. It says close, and all that does is close the utility. Doesn't really do anything, just closes the area. So make sure you select that from your whatever you need to close from that list and click close item. When you do that, it's going to ask you for a date, closing date. Enter the closing date. You're in work year 2024 when you're doing in this example, so you need to backdate that to December 31st, 2024, so that it won't give you an error message. Click OK, and that will prevent it from carrying over to the new year. But what if you need to carry it over to the new year? In our example, we've got a handful of purchase orders and blanket certificates that we do need to carry over to the new year. But we don't want to carry over too much, because again, that will restrict my 2025 budget if I'm not going to actually use all of that available balance on my carryover purchase order. So another great thing about temporary mode is that since you have the year open, you can wait, you can keep these 2024 open, and once you get that final invoice for whatever bill that you left this open for, you know how much your final payment will be. You can log back into 2024 and adjust the payment down to exactly the amount of the final invoice. So you do that by selecting just one at a time and click on that adjust button at the bottom of the list. It'll open up something like this example. In this example, we have a purchase order open for fire equipment inspectors. We had an inspection in December, and we didn't get the bill until January. Now you can see that we had our purchase order open here for about for $1,650, but we really didn't have that thorough of inspection this time, and we have only spent the final bill is only going to be $450. So what we want to do is enter a meaningful purpose first. So we're reducing this amount to the carryover amount. We want to make sure that we date this December 31st because we're in work year 2024. That's the last date of the year, obviously. And then you're going to enter a negative amount. So this is the difference between what the current balance is and what the final payment is of $450, and that will reduce or show us our revised balance of the amount of our final invoice or final payment or payments, however many they are, that are going to be in the new year. All right, and I already mentioned you can go ahead and wait to keep this, if you have temporary mode, until you get that final invoice so you know exactly how much it will be. All right. So I'll pass the mic over to John.
Hello again, everybody. John's back, and you get to hear my half West Virginia accent for a little bit longer now. Let's get going here. I'm going to take you through verifying your W-2 and W-3 information, and we're going to lead into adding your W-2s and as well as editing them and printing them. So we'll go through that whole process. We may be a little hurried. Let me check our schedule real quick. So we are on for 11:30 lunch. My section should be done here, but we may have to make some adjustments. So just a word of fair warning. So we're going to get started with the W-2. So first things, before you even consider adding W-2s, we'll need to make sure that all the information that prints on them is going to be correct. And specifically, especially early on, we're looking for, the basics: employee name, address, social security number. I'll say the Social Security number should have already been caught if they are an OPRS employee. They use Social Security number as a identifier whenever you're doing all of that. Still double check, make sure mistakes do happen, but there is a little bit of a fail safe built in, especially with OPRS and OPNF. What we're going to look at, we'll look at payroll, maintenance, and employees, and that'll bring up our employee list. And easy pickings, we'll select Sally Bay here at the top, and we'll do edit. And once again, in particular, we're looking at the edit advanced screen here. I know it is kind of chopped up, but this is the fields that we're concerned with. So employee name, make sure the name's correct, address, and then down at the bottom, the Social Security number. You want to make sure those fields are all correct. Let's see here. There we go. Next, you want to have a look at your local and school withholding W-2 IDs. These are the shorthand abbreviations that appear on the W-2 indicating what the local and school taxes are. The school tax is pretty straightforward. The local tax, it gives you a little bit more variability. So I will go through that now. So it'll be under payroll, maintenance, and withholdings. So you can see here the W-2s, the W-2 IDs. So Buckeye Village, just Buckeye. Little Village, Little. We've got some short names here. The school districts, they're set by default. So it'll be SD and then the school district number. So in our case, let's have a look first at the school district. And you'll see down here, the red highlighted box, the 1, 2, 3, 4 here, it will, that's where it pulls from. So it adds the SD automatically for school district, and then it pulls this district number in and uses that as the abbreviation. For local tax, it's a little more freedom here. So you can see this W-2 abbreviation. You've got this character limited field, Buckeye. It fits. I believe it's 8 characters is all that you have. So if the name is longer than that, you would have to get pretty creative with how you abbreviate that. And new this year, UAN is going to support the e-filing of W-2s for both RETA and CCA. So RETA is Regional Income Tax Agency, and then CCA is Central Collections Agency, I believe it is. So there is e-filing with those. There's a new tab when you go into that edit withholding screen, and it reads EFW2 local taxes. I know that we got a question earlier on regarding filing local with EFW2. So this is the new tab with the information for that. But keep in mind that this is going to be strictly for RETA and CCA. We don't support any other systems, cities, anything like that. So just bear that in mind. If you don't use RETA or CCA, this won't apply to you. So as far as this EFW2 local taxes tab, really, I hate to say it, but we can't be much of an answer here. Both RETA and CCA have their own particular guidelines that need to be followed. So you'll need to consult with those as far as what information and how it's formatted for these boxes. The place code, place name, states obvious, tax type and administrator. You would need to refer to the RETA guidelines for those. And then likewise for CCA, same thing. We have to give you a bit of a non-answer here, and it will just defer you to the CCA guidelines for exactly how all of this is entered and formatted. One thing with CCA, so if you have any CCA withholdings, you do also have to report a school tax report to them. So it is under the EFW2 local taxes for the school tax, the only option is a place name right here. And just make a note that it has to be formatted exactly to CCA specifications. Once again, this is not set by UAN. We're not privy to any insider information. You would have to refer to their filing guidelines for what to put in this place name box. So next, we've verified the employee's information. We've put in the EFW2 information. So now let's do our due diligence here and let's check our own entity's tax information. So under General Maintenance Entity Setup, there's a couple of fields that you may want to double check, especially with this being an election year. It could be easy to miss some of the information that prints on the W-2. The Ohio and federal tax ID, those shouldn't change. Those carry over year to year. They should be okay. If they're not for some reason or another, you can come in here and change it. But more importantly, the entity contact information. So you want to make sure that this is correct. Once again, like I said, it was an election year, so I know we do have some new fiscal officers out there. Make sure that this contact information is correct because it is sort of hidden in this entity setup screen. You may have already changed it. It may be correct, but at least, do your due diligence and have a look to make sure. There we go. Next, we're going to have a look at the W-2 report. So the W-2 report, I know that went kind of quick. It's under general, my apologies, payroll reports and statements. And then there's a tax reports federal in there. And in the drop down, you can see here, there's a W-2 report. It's the third one on the list, so it defaults to that federal tax report, and then 941 Schedule B, and then your W-2 report. You'll want to print these and have a look at the information on them. It's essentially, it'll print your W-2 information for each employee, but in a more concise and easier to read form than the full W-2. It gives you your particular wage bases, gives you your particular withholdings, things of that nature. So it's a good report. And quite honestly, if you've had any sort of mismatch between what you paid an employee and expected to withhold versus the actual withholding, if you talk to me, I probably referred you to this report as well. It's a very good report to see a lot of figures for comparison in one good, concise place. As far as printing the W-2s once we're ready. So first things first, you'll need to add them into the system. But you're going to want to hold off. We've already verified the employee information. The big thing to note here, you want to make sure that you're done posting your payroll in 2024. So in particular, this is going to be actual post date of 2024. If we refer back to my previous section where I had that January 3rd pay date, as far as post date goes, that would be considered a 2025 wage. So really, as long as the year rolls over to January 1st, you should be okay to go ahead and start working on your W-2s. You also want to make sure that you've reported and paid your December and fourth quarter taxes. There would be, this is just business as usual. Whatever your process is for this, you don't necessarily have to speed up or do anything out of the ordinary. You just want to make sure that you still follow your schedule. And then that previous report, the W-2 report, you'll just want to make sure that all of your reported taxes match on that W-2 report. W-2 and W-3s, they can be prepared in either year. So you can prepare those in 2024 before the year is closed. There's no issue with that. If you do prepare them, while tip mode is still open and you haven't closed 2024, you'll want to do that from work year 2024. It would still work in 2025, I do believe, but But best practice just says go ahead and do it in work year 2024. After you close the year, though, you're still able to access them and add them, edit them, print them as needed. So really, W-2s aren't dependent either way on closing the year. You just need to make sure that you follow the federal guideline. As far as creating the W-2s in the UAN system, you'll go through payroll reports and statements, and then under external forms is where your W-2s are going to appear. I will go ahead and hit it from the top. There's a notice that is required to be included with each of your W-2s. We'll go over how to print that, but in big red writing here, we want to make sure to drive it home that you do need to provide this notice. It's often forgotten, and it is just a boilerplate form. It's not specific to any individual. You can make 100 copies of the same form, and that's perfectly fine. But we do just want to hit on that just because it is often missed. So once we're in our W-2 and W-3 forms, our report year there you can see is 2024. And then we'll go ahead and click the add button here. And that'll bring up a pop-up before you get to your add W-2 screen. Pretty much it's only one W-2 form per employee per year. That's just standard. There's no reason an employee should get two different W-2s. So just be aware if you already have one added in batch, you either need to work with it or you can delete it and start over if you make manual edits and things go awry. So once you click OK on that pop-up, it'll bring up the Add W-2 Form screen. You can see that it does default to employee type paid this year. This pulls in any active or inactive employees to this list. Just anyone that has received a paycheck in 2024, that's where this list pulls from. We do want to make a note up here in the top right corner. We've got a couple of things to read. So just note that the W-2 reports taxes withheld, not remitted. So you may, if you run these before you actually pay your fourth quarter taxes or anything of that nature, it's still going to report the amount that was withheld from the employee's pay, regardless of whether or not you've actually paid it yet. And also, there are many reasons that your gross wages that are reported on the W-2s may not necessarily match your true gross wages. So if we pull up that little question mark box, you've got some pre-tax withholdings that can affect your federal, state, Medicare, schools, anything like that. Cafeteria plans, they're kind of top of the hierarchy. They affect the most. So you can see here, federal, Ohio, and schools, it can be affected by a salary reduction. So that would be like your pre-tax OPERS, pre-tax OP&F, things like that. Cafe plans, and then your deferred comp also reduces those taxable wages. So those are considered pre-tax. And then to go a step further, cafeteria plans will also reduce your Medicare, Social Security, and local income taxes. So that would be if you have pre-tax insurance, things of that nature. So those would explain why your taxable wages on W-2s may not necessarily match truly what the employee got paid. And then we'll pop over and we'll go ahead and select our employees. It's a pretty good guess here that all of these will be correct. Like I said, it does just pull in any employee that got paid this year. So you can select all and click save. And then you might not be done just quite yet. You may have some edits to make to your W-2. There are a few possible reasons. If you converted to UAN payroll this year and didn't post any conversion wages, you'll have to edit W-2s. That's probably just a handful of you. If you have any errors in payroll posting, So I know I've talked to probably 2 or 3 entities already this year that I've said that they'll need to call back at year end to edit the W-2s. There are some obscure issues that we run into that you may have to just edit on the W-2 as opposed to doing any sort of adjustment in UAN. If you think that's the case, or if you did hear that from one of our support staff, you'll need to call in and we can take you through that edit. And then if you have any additional information in box 12 or 14, or if you have any third-party sick pay, the third-party sick pay, it's pretty rare. I've only heard of a couple of instances of that. It's something that you, if you don't know what it is, you don't have it. So as far as box 12 or 14, these are some special interest boxes. You may or may not need to edit them in bulk. If you do need to edit them in bulk, you would go through this add and edit field. In the W-2 screen, you can see there's a W-2 editor box. If you're making the change for the first time, you'll do the add items. If you're editing existing ones, so if you put it in, realize, oh, something's wrong, you can go back in and edit them in bulk as needed. We're not going to show you an example of that. It's a pretty straightforward process. Instead, we're going to focus on editing single W-2s. So this would be whether you're correcting an error, need to change specific figures, add one-offs to the box 12s and 14s, things like that. So you would select your employee, and there's an edit button down at the bottom. You'll get a pop-up. It says that you must select the override. I'll show you what that means. These fields don't exactly work like other screens within UAN. Usually in UAN, if you get an override box or an adjustment box, it allows you to just type into it by default. You can see here, though, all of these circled boxes. So over on the left side, you've got print name override, details override, box 13 override, as well as in the middle, the print federal override. You have to select those for each section that you need to override some of the details. So if, for example, let's say you need to correct an employee's address. Best practice says you should do that in the edit employee screen, but we do give you the option here. If you select that details override, that address box will become available and you can make any changes needed to that, as well as the social security number. Same thing, it works for all of the tabs here. So same thing with the state in box 12. Need to correct anything with the state, you have to select that print state override. Likewise with the print box 12. And same thing with your local in box 14. So any corrections to local or box 14, we have those applicable override boxes. RETA and CCA reciprocity, UAN can handle that. It's rare, but it at least warranted a mention in the presentation. That's, if you don't know what local tax reciprocity is, probably doesn't apply to you. Basically what it is, you have certain municipalities, they honor each other's tax rates. So if you have one tax district that taxes at 1.5%, and then a second one that the employee, let's say, lives in that taxes at 1%, the employee would still only pay 1.5% total. So that's what that is. We're not going to delve into that. But we just want you to know that there is, a workaround for this year in UAN, and then in following years, it'll be a little bit easier. As far as printing W-2s, as I said earlier, you can do that from the previous year. You can do that, or from the prior year in temp mode. You could also do it after you close 2024. You can do it from work year 2025. No issue there. The most important thing is going to be making sure that you follow all the deadlines. We'll cover that here in a second. So as far as printing your W-2s, you've got 2 options. They do print to plain paper, but there are 2 formats. You've got 2-part and 4-part. There are some fancy perforated papers that you could buy. You're not obligated to by any means. You can just print them to good clean white paper. I would make sure that it is good quality paper. You don't necessarily have to do like cardstock or anything like that, but very thin, dull paper you may want to avoid when you're printing these. So make sure you're just printing these to good quality paper. Once again, before you start printing your W-2s, make sure you print the notice. It is imperative that you provide this notice with the W-2. However you give that to the employee, whether you mail it to them, whether you hand it to them, whether that you have like internal mailboxes that you use, you have to provide this notice to each employee. To print that, little yellow box here up at the top, it says print notice. Like I said, it is just a boilerplate standard message. You can print them for however many W-2s you need. If you've got 25 employees, you can print one, make 24 copies, have 25 total, job done. They're not individualized in any way. It's just some legalese that the IRS decided that needs to be provided with the W-2s. And then once you're ready to print your actual W-2s, you'll select everybody in your W-2 list and hit print W-2. And if it was just so easy as selecting which printer you would print to, but unfortunately we have a little bit more selecting to do. As far as printing your W-2s, once you select that button, it'll bring up this box. You've got the blue side, you've got the green side. The blue side is going to be your employer side. We'll focus on it first. There's a lot of caveats to the employer side now, especially with e-filing becoming more and more. We'll call it popular, but we both know that it's more and more required. As far as the copy A, that is for when you file your federal copies by mail. Very strict. 10 forms now between like three different types of forms. You would have to have very, very, very few employees and contractors that would get a 1099 to even qualify to file by mail now. So copy A, you may be able to avoid. Copy D, these are for your own internal records. These are strictly preference for you. The 2-part versus the 4-part. The 2 parts, the 2 employees per page, half page each. The 4-part, in this case, would be 4 employees per page. And then the copy ones, these would be what you would provide if you file state, city, and locals by mail. State, again, very unlikely that you would need to provide a state copy just with all of the electronic filings. So if you file your federals electronically, you can avoid your copy A. If you file your states, you can avoid at least one copy of your copy 1. Oops, sorry about that. Got a little too click happy. And then if you file any of your so if you do have RETA or CCA, consult with them, but you may also be able to avoid the copy ones for those as well. So really, you're only looking at these if you're filing by mail. You would include the applicable copies as needed. All right, now to the meat and potatoes here. I know I've said that twice now. We had Peter the Pig, we had the couch potato himself. It's the meat and potato presentation. We're printing the W-2 employee copies here. So again, you do have the option. You've got the 2-part. I call this one the arts and crafts type W-2. So it's 1 employee on top, 1 employee on bottom. So 2 employees per page. You have to cut them out. You have to provide them with however many copies they need, a copy B, a copy C, probably multiple copy 2s if they have multiple, if they have a local tax, for example, you would have to do a state and a local version. So a lot of work for a W-2. If you have a lot of free time in your busy year end, would be a great way to get the old scissors out, cut them, stuff them in an envelope that's about 1 inch thick and mail it off to the employees. Or you can just use a 4-part. Way easier. It gives you a copy of the federal, a copy for the employee records, and 2 of those copy 2 state and local. options. It's one employee per page, no cutting required. All you would have to do, print it out, put it in an envelope with the notice, and give it to the employees however you see fit, whether that's mailing it to them, handing it to them, sticking it in an internal mailbox. It's however you distribute them, just make sure you have the notice. If you take one thing from this presentation, actually two things. 4-part is superior, and that is factual as of John at UAN, and make sure that you print the notice to go alongside. If you are one of the rarities and you are filing federal by mail, then we do still have the option to print the W-3s as required. Once again, this is only if you are filing by mail to the federal government. It does do a lot of calculations, so in the event that you do run the W-3 and you have quite a few employees, it may take a few seconds to pop up. Once it does, the screen will look like this. Just a very minimal amount of work to do on this screen. Up in the top left, we have the kind of employer. UAN does not have the answer to that. UAN would never have the answer to that, so you would be on your own with selecting that particular field. And then that line 14, we have a manual entry field for any third-party sick pay. Once again, you'll know if you have third-party sick pay. If you don't know what that is, then probably don't have it. All right. Now we're back to what's going to be more applicable to the majority of you. We'll be creating the electronic file now for the W-2s and W-3s. So when you file these, it's sort of an all-inclusive package. It'll send all the necessary information to the applicable agency. We've got 4 options now. We'll cover those here in just a second. The first one we'll do is a federal filing. So we'll create the electronic file for the federal filing. So instead of doing the select all and print buttons, we have a button down at the very bottom highlighted in red for file. This is what's actually going to create the upload file that you would upload to the Social Security Administration's website. So when it comes up, you'll see, like that print W-3 screen, you do still have the kind of employer and third-party sick pay, but you do have a few other fields that that you need to look at and you may need to enter some information in. The first is BSO user ID. That is it stands for Business Service Online. That's the Social Security Administration's system for handling all of these. If you don't have a BSO user ID yet, you are already behind. Last year or the year before, I forget the exact timeline. The going time to get a BSO user ID was about 90 days. So you may want to check these do carry over year to year. So if you already have one, you're in the clear. But if you're new to these electronic filings, you might want to hurry up and request one of these BSO user IDs because they could take a bit of time to actually get to you. And once again, UAN does not know what your BSO user ID is. We have absolutely no idea. So if you call and ask us, we're not going to be able to give you an answer. You'll just below that, the employer information, you'll want to have a look, just make sure everything looks just fine. It should. We already verified the entity information earlier, so always best just to have a quick double check. And then down at the bottom, we've got, you may have to enter your email and phone number. This is just contact information that's included with the filing itself. And then down at the very bottom, you'll see there's a file type. So by default, it is just the federal filing. All the fields apply for federal. So I would select OK here, and then that'll create a file that you'll upload to the Social Security Administration's website. But if you want to file, some other W-2 electronically, Ohio, for example, you just change the file type down here at the bottom. But one thing to notice, that BSO user ID, it's now whited out. We get a lot of calls. They're trying to file the state version, and they're asking what the BSO user ID is. Well, it's not required anymore because that's a federal program, and Ohio doesn't use it. So you can see up in the top left, it's now whited out. So you don't need that for your Ohio or for your local filings. But just know if you do give us a call about what's your BSO user ID when filing the state, we might get a chuckle or two because it just means you're on the wrong file type at the bottom here. Same thing when you ensure all the fields are right and filled out, you'll click OK, and it'll create the upload file, and you'll upload that to, well, it's Ohio Business Gateway, but it's also sort of not Ohio Business Gateway now. What a great time to go through a rebrand. So Ohio Business Gateway is now Ohio ID. Personally, old habits die hard. I'm still going to call it Ohio Business Gateway, or OBG for short. Ohio ID is going to be the same thing. They're probably going to be used interchangeably for at least a couple of years. So just be aware that if you hear Ohio Business Gateway and you've never dealt with it, it is Ohio ID. They're used interchangeably here. And then your RETA and CCA e-files. Down at the bottom, we have two new selections. We've got the CCA and RETA. You would select whichever applicable one. The guidelines for it going to be very similar to the state filing, where it's no BSO user ID. All the other fields you fill in as needed. Check the address, email address, phone number, third-party sick pay if it applies, all that fun stuff, but no BSO user ID for CCA or RETA either. When you click OK, it'll save the upload file, rinse and repeat. It's like a shampoo commercial when filing your W-2s. And then as far as submitting those, unfortunately we don't have any guidelines on the exact way to submit those. Once you have the file, though, you can contact RETA or CCA. They may be contacting you, depending on how proactive they are. But you would need to follow their guidelines as far as the submissions. Deadlines, overwhelmingly, a lot of the taxing districts just follow the federal's guidelines, which is January 31st. That's to distribute all W-2s to employees, e-file the W-2s, all that fun stuff. You'll want to check for any changes to the state, school, and local tax deadlines, but generally it's January 31st across the board. You will need to complete any of the corresponding transmittal forms. So think of those as the W-3s. The state was the IT-3. You may have, for local tax, you may have some transmittal forms that may be needed. Again, this should be only if you file by mail and not electronically. And then if you do file by mail, we don't produce those transmittal forms. We can get you the information to complete them, but we just don't complete the forms themselves. You'll need to file your annual reconciliation of taxes for your Ohio withholdings. Once again, UAN does not create that. You would need to pull the information from UAN and complete the form as necessary. We've got a nice report for it. It'll be under payroll reports and statements, and that box is hiding it. It's tax reports other is the section. And in the drop down, you'll select the Ohio tax report and then select for the full year. When you print that, it should give you all the information you need to, let's say it together, complete the forms outside of UAN. We don't create these forms. We can get the information to you, and then however you complete those, you would be able to do that as needed. Same thing for local. Under that tax reports other, we have the local tax report. You can use that to do any local tax reconciliation. You'll print that report, and once again, complete the form online, or if you file by mail, you would do you would file it that way. All right, so it is quiz time. This is a very near and dear question to me. How many donkeys and mules were reported in Ohio in the 2022 USDA agricultural census? Let's see here. What's the answer? It's actually only 7,300, and that is not enough. That is not enough donkeys. If you're a farmer out there, we need more donkeys. They are fantastic. And you're stuck without. I mean, you're in the wonderful graces of Alex. I'll turn it over to him. Here you go. And Alex, all yours.
Thanks, John. Appreciate it. All right, so we'll be going over printing of 1099s and 1096s here. So first thing I want to draw your attention to is a couple years ago, they changed the 1099 form. So the old forms used to have the individual year in the top right corner, and the new form was to get away from that. So you're gonna, unlike your W-2s, you're going to need to purchase your 1099, 1096 form packets because UAN doesn't print the boxes. It'll fill in the boxes for you, but doesn't print the whole form. So that's one thing to keep in mind there. Also, when we're dealing with 1099s and 1096s, a couple more reminders. I know Lauren brought it up earlier, but if you have any of the older forms that are tractor feed with holes on the side, throw those away. They're not going to work in a UAN modern printer. If they're carbon-backed forms, those are for a typewriter, so they're not going to work either. Sometimes the IRS still gives them out, or there's some older ones laying around. So any of the older forms you want to get rid of and move on from them, get yourself a new packet. UAN doesn't recommend any vendors, so a lot of different vendors make 1099, 1096s. You can get whichever one you'd like, and just make sure they work with a laser printer, and most do. So another reminder is that just like W-2s, your 1099s and 1096s can be added and edited in either work year. So once you load 25.1 and start your year-end process, you'll be able to log into year 2024 or 2025. So you can start your 1099s and W-2s in either work year. And after 24 is closed, you can still work on them, edit for any needs in 25 if you have to. So you don't have to worry about restrictions there. And as we brought up before, and there were a few questions that we tried to push out to everyone, to e-file your 1099s, you're going to need a TCC number, and that comes from the IRS for their fire system. It's called the Transmitter Control Code. You get that directly from the IRS. You'll get it on their website. And last year we did have a few people. So the IRS is, they have two redundant systems. They have the IRIS system and the fire system. You want to focus on the fire system because that's the e-file that UAN creates. We won't make one for the IRIS system. So make sure you get a TCC code number from the IRS for the fire system for your 1099s to file those online. To start your 1099s, you're going to go to General, Reports and Statements, and click on Year End. And then you're going to choose between 1099 Miscellaneous or 1099 NEC. If you're not sure which forms to use, you can contact the IRS or check their website. Most people have moved to the NEC form by now. And this is what it'll look like when you click on the 1099 screen. So to add, you'll just click the add button and you'll select the year for 2024. If you were to try to do this right now, you wouldn't be able to add the 24 because you're not on the version 25.1 yet and you haven't started year end. Right now, the software would only allow you to work on 2023s. So we finalize everything with the new software release. That'll be coming out in a couple days. And once you get in there, you'll add your 1099s, hit 2024, and you'll see this screen for sorting which vendors you're going to produce a 1099 for. So first on the top left, you have the vendor type. It's 1099 required or all vendors. And the thing here is UAN isn't telling you which which vendors what 1099 is required for. What it's telling you is when you set up that vendor, you checked a box that populates this list for 1099 required. And I'll show you that in a second, how you create this list. But that's basically, if you have a vendor that you know will need a 1099, When setting up that vendor, you'll check the specific box so it'll shorten your list for you here. If you haven't been doing that, or you're a new fiscal officer who's taken over for an old fiscal officer and you're not sure what they were doing, you could select all vendors on that side. Off to the right side, we'll jump to that 1099 box here real quick. So this is what your vendor setup screen looks like. And you'll see the highlighted in the middle, we have the 1099 required and the W-9 needed. That basically will populate those, they'll populate this vendor on a list as needed. So when you see the 1099 required box on the previous screen, that's where this will come from. So you can go 1099 required if you know you're setting up a vendor and they need a 1099, or just stick to all vendors. That'll list everyone for you. Whatever you choose on the left side, on the right side, you're going to look at your payment total, and you're looking for any payments you've made to a vendor for at least $600. Another thing to remember is if you migrated and joined UAN this year and you have partially paid vendors on your old system, you'll have to add those figures together. So if you've paid a vendor on your old system, you know, a couple $100, and then on UAN, you paid a few hundred more, it might not show in that $600 range because that's not how much you paid them on UAN. But you might need to consider that because you would need to create a 1099 if the total crosses that $600 amount. So once you're done here, you hit select all, click save, and then click close. So next we'll talk about editing your 1099, very similar to the W-2. And this is your override field. So you'll select edit, and then you'll see the new window pop up, and we're using the 1099 NEC as the example here. If you have to edit anything on a 1099, so like we said before, if you paid a vendor partially on an old system before joining UAN, this is where you would override the amounts paid to that vendor. If you have a vendor doing business as a different name, this is where you could override that name. Also, if you had a typo in a vendor's name, this is where you could edit it so they get the correct 1099. Or if you had two vendors by mistake under the same name, this is where you can combine all your payments and put the one name with the one total amount. So it gives you several options for overriding those fields. Once you're done, you'll click save and then close. So when you're printing your 1099s, because unlike the W-2s, you need to buy these forms. We don't want you to waste those forms. So when you're ready to print, we want you to print that on plain paper, and you're going to select 3 1099s and test your printer alignment. So you'll leave your plain paper in, you'll select your 3 1099s and hit print 1099. And then what you're going to do is old school, you're going to hold up your actual purchased form behind the printed paper, make sure the boxes line up correctly. If they do, great, you can put the actual purchased forms in there and print your 1099s. If those boxes don't line up correctly, you can manually click and drag those boxes as needed to fit your form. Like I said before, there are many different vendors who create 1099 forms, and the IRS requires a standardization, but some boxes are slightly shifted left, right, up, and down. So it's one thing to remember. It might not fit all of your forms the first go. Hopefully they do. But if they don't, you'll go to General, Maintenance, Entity Setup, and Forms. And that's where you'll edit your 1099. We've got a quick video on that. I won't show it to you, but we'll give you the link in a second here. First, we'll move on to your 1096s because it's the same process. So when you're ready to print your 1096s, you'll select all your 1099s, and you'll hit, you put in your plain paper, select all, and click print 1096. Now you'll hold that up to the 1096 form, see if that aligns correctly or not. If not, you'll edit that in the same place under General Maintenance, Entity Setup, Forms. And here's a visual taking you to Forms. And here you'll see first you select the year and which you're doing. So you're going to switch from standard to custom layout, select your year, and then you could edit your 1099 or 1090 or 1099 miscellaneous or 1096 forms as needed. Here's the website we have on the video on how to do that. If you've ever had to edit payments or warrants, it's a drag and drop process. So to see the custom layout design for the 1099, you'll go to UAN link and you'll click on training, and then under year end, and you'll find that 1099, 1096 custom designer video. Deadline, again, I think John touched on these before. Most are January 31st, so your 1099 and 96s need to be in by the end of January. I'm going to jump on to the trivia section. I don't have any polls, but I have fun times. So we'll start with keeping with our Ohio theme, Ohio road trips. And the nation's most famous road trip, the Oregon Trail, runs through Ohio. Do you know where? So you don't have to scream or throw out your answers out there, but think about it. And it runs through the very top of the state along Lake Erie, which is modern day US 20. So Oregon Trail cut right across Lake Erie there through Ohio. That being the most famous road trip in American history, here are some others you could take around Ohio. And we tried to include a lot of the counties. So we've got Kelly's Island in Erie County, where they have famous glacial grooves in their geological preserve. We've got Ashtabula County here on the right with Geneva on the Lake, beautiful photo there. It was a vacation spot for Rockefeller a long time ago. Greene County in Yellow Springs, very famous. Takes you right back to the 60s every time you visit. And on the bottom right, we've got Charm from Holmes County, which is known as Little Switzerland of Ohio. So very beautiful places to visit around Ohio. We've got a couple more here. In Lucas County, we have oak openings between White House and Swanton. Very beautiful nature preserve for hiking. In Cuyahoga County, we've got the Metro Park toboggan chutes, which they're iced all year round and refrigerated. Pretty excellent there to try in the summer or winter. Geauga County, we have a shot from Burton here. Ma and Pa's every winter. You could take a horse-drawn carriage through the woods and cozy up by Ma's fire for some hot chocolate. And then in Hocking Hills of Hocking County, we've got beautiful tourist attractions, and Ash Cave is one there. Moving along, we're going to start the year-end checklist here. So to do that, you go to General, Maintenance, Year-End, and then the Year-End Checklist, and click your current year. So that'll be 24, and this is what your checklist looks like. So every year you'll see these, doesn't change. So once you've completed the section, it'll turn green. Some sections that we'll touch on again later, you have to check a box to acknowledge you're carrying over things, and those will turn red when you leave the checklist. So something to remember there. We'll touch upon it again. This is just an overview. So some important things up top. You need the version 2025.1 to get the year-end checklist. So you can't start that until you get the new software version, which will be out in a few days. The computer date must be after December 2024 to close the checklist. Temporary mode. To open temporary mode, you have to go to General Maintenance Year-End and open temporary mode, and that will enable you to get into year-end and then work on the checklist. The year-end checklist itself, we'll go through the tabs here. So after you complete all the tabs, and we'll go in detail on those, you're looking for the green check mark. If you don't have that, you can't move on. Bank reconciliation, as an FYI, it needs to be dated for 12/31 of 2024. Last year and every year, we run across it a few times where the bank reconciliation gets closed out with a 12/30 date of that year, and you won't get the green check mark. And what you have to do in that situation would be to make one more bank rec, date it for 12/31, and then close the year again. You wouldn't have anything else to clear, but you'd carry over all the numbers. So instead of creating an extra bank rec for yourself, make sure you're dating your final bank rec of the year with the 12/31 date. And you can't close out the year until your computer is officially in January of 2025. So another reminder for the bank reconciliation, you will cause yourself a little bit of extra work if you dated before 12/31. Also, December is the only bank rec you can void if needed, and we give you that because things can come up a little late in year end that you have to go back and correct. So the only bank rec you can void needs to have a 12/31 date. So another thing, if you date at 12/30, you can't void that one. You'd have to add another one for 12/31 and make your changes there. All right, and any questions, you can refer to your best practices here. So another thing to remember on your December bank rec is outstanding adjustments. If you have adjusted any receipts, payments, fund balance adjustments, anything like that, those will be under the primary adjustments tab on the bank rec. And when you close the 12/31 bank rec, it automatically closes any adjustments that are out there. The adjustments should be taken care of when you first make that change. So if you have a receipt and you did an adjustment to it, you should have cleared that adjustment and the receipt at the same time, or cleared the adjustment when the receipt was changed at the bank. So if you have these things laying around out there, you're going to look into those and see what's out there, what can be cleared, and if you need any extra work to do. At the end of the year, all that's going to get wiped out, and you don't want to have a balance problem at the end of the year there. So year-end checklist. Now we'll go a little more into the Group 4 tabs. We've got A through H. So first we're talking batch transactions. So for A, you can't have any batch transactions, so you can't have any batch receipts, payments, purchase orders, EFT. So if you use UAN payroll software, you can't have any EFTs hanging out there in batch. You have to produce the file if that's showing as the X. You can't have any wages or withholding payments out there if you're using the payroll software, and you can't have any outstanding payroll adjustments. So if you run across the red X on EFT, even if you manually type your information on the bank's website and you don't use the UAN file, you just have to go into the EFT utility and produce that file. That will give you the green check mark, and then you can move on there. If you need any assistance with that, just give us a call at UAN support. We could walk you through it. Another note on withholding adjustments. If you've had any withholding adjustments that are unpaid, they cannot be carried over into the next year. That would be basically off a wage adjustment, so you'd have to look into that kind of thing. Unpaid withholdings can be carried over. Unpaid withholding adjustments cannot. So that would be basically if you had a wage adjustment where somebody had an issue with their paycheck, some kind of withholding throughout the year, and you have a credit for it, or a debit, then you have to take care of that before year end. A report that's going to be helpful for that is your withholding adjustment report. If you go to payroll, reports and statements, and then withholding reports, you're going to click on the drop-down menu and you'll select the withholding adjustments unpaid. That's going to show you anything that's unpaid for those withholding adjustments. So that's going to be what you're going to have to clear up before year end. For 4B, we have the demographics and debt screen. We're going to break this down into two different sections. First, on the top, we have submission type. So keep things simple for yourself. And if you're a regulatory filer, you're going to select submit through UAN with AFR filing, and that's the recommended option. If you're GAP, FASB, or OCBOA, you would select the complete these requirements online, only if needed, and OCBOA is going away for the web gap. So something you want to keep in mind. The vast majority of UAN users are going to select submit through UAN with AFR regulatory and take the recommended setting on the top left as submission type, and on the top right, additional audit reports. Again, keep things simple for yourself. You're using UAN for the automation, so you're going to include the additional reports UAN generated for you. So that's all your year-end reports. Absolutely, you want to include those for year-end. On the bottom, we have the AFR demographics and debt section. So thing to remember there is your population comes from the last census. So if you don't have that, you're going to grab that one. To back up real quick, we've got a highlight on the sections you're going to select here. So submission type is going to be the recommended submit through UAN instead of individually online. If you select the complete these requirements online, then you're going to need an opt-out code from the Hinkle system. You will get this pop-up. It's going to tell you your Hinkle system needs to be filed by the deadline, and you're going to need an opt-out code for UAN, and you'll get that through your e-services portal or contacting the Hinkle system. Additional reports on the right, again, keep those as UAN generated unless specifically you haven't in the past. And the beauty about that is too, audit likes to look at some of the reports ahead of time in advance of the audit. So if you're submitting through UAN, again, it's automated, pulls that information from the system, and they can get a jump start on that, whereas you'd be dragging on and making the audit more complicated if you submit those individual reports by yourself later, if you don't have to. So again, most regulatory filers are going to go with the default settings there. And back to the demographics and debt. So we talked about the population comes from your census. Your UAN calculated values are automatically going to pull in there for total annual final appropriations and your carryover cash balance. We have the inside and outside millage section. So UAN support can't help you with that one. That would have to come from your county auditor if you're not sure about it. And then on the bottom, you have your debt obligations. So if you have any of those, any outstanding debt, that's where you'd enter it here under the demographics and debt section. If you don't have the debt, you can skip right over that. Another thing to note on the top, for the population, libraries are a little different. They won't say population, it would say patrons. And if you're a special entity, this whole screen would be blank because a special entity wouldn't have anything here. So there's nothing wrong there. You skip right over it. And let's see. Any questions on that so far? Doesn't look like it, but I'll keep an eye on that if any come in. And we'll go into the next trivia section I've got here. This one is going to be Ohio wildlife. And the question is, how many species of deer live in Ohio? And all the photos here were taken off the ODNR website. They've got great contests for deer for the year, and as well as other wildlife. So, species of deer in Ohio, bit of a trick question. Ohio only has the one species of deer, the white-tailed deer. Pretty common, and you see it everywhere in state parks, wildlife areas, backyards, highways, all over Ohio. Lauren sees them all the time in her commute. Here we've got odnr.gov. They have a fantastic wildlife photography contest, and here are some of the winners for this year. We also have some additional from last year here, and even included the hunting dogs on the bottom. So ODNR, fantastic wildlife contests and conservation. All right, let me check the questions again. Everything looks good there. Debt information submitted for the term. Yeah, we're going to cover that one later, so I'll skip that one for now. All right. So we'll turn it over from here to Lauren. Thank you guys very much, and I'll be picking it up again later.
Thank you, Alex. So I'm going to start off my presentation with another trivia question. This one will have a poll, so you'll get to chime in here. But in 1986, this carnivorous mammal was reintroduced into the following watersheds: Grand River, Killbuck Creek, Stillwater Creek, and Little Muskingum Creek. And then in 2002, this animal was removed from the Ohio Endangered Species List with confirmed sightings in over 75 Ohio watersheds. So we'll give you guys just a minute here to submit your answers to see what you guys think is the correct answer. Okay, and the answers are starting to come in, so we'll give it just another minute and then we will see what you guys think the correct answer is. All right, so it looks like 40.9% of you got this correct. The answer is river otter. They're awful cute. Not as cute as John's donkeys, but close. Okay, so we're going to jump back into 4C, which is the annual financial report area. This is where you select how you are going to file. There are two OCBOA methods, OCBOA modified cash basis, which is when the entity has at least one non-pooled investment, and OCBOA cash basis, when the entity has only pooled investments. And then you have regulatory. If you are unsure how your entity is filed before, you can look in UAN or discuss with audit. Most UAN entities file regulatory. As mentioned in the introduction slides, OCBOA is no longer filed through UAN. Only about 40 UAN entities filed OCBOA last year. If you do file OCBOA, when you click on either one of the OCBOA options, the bottom will give you a green check with more information. You will need to request an opt-out code from the Hinkle system via your entity's e-services account. You will also see the Notes and Documents section turn green. If you file regulatory, UAN will submit your annual financial reports to the Hinkle system for you. If you have a fund that needs to be mapped, you will still need to use the fund utility. Fund mapping is when you have a fund that needs to be included with the general fund, and Alex will be discussing this in greater detail in the next section. 4C is incomplete without uploading your AFR notes. UAN does not create the AFR notes for you, and UAN support cannot assist with creating the notes document. AFR notes are separate and need to be uploaded into UAN, so they will be included in your annual financial reporting to the Hinkle system. There are templates available on the LGS website, and you can view prior year notes in UAN. Uploading your notes will be one of the last things you do before closing the year, and we will discuss how to upload your notes in a later section. (4D) is information about the entity and the fiscal officer. The green section at the top and the information in the bottom section is required. If the information in the bottom section is incorrect, you can update this information under General, Maintenance, Entity Setup. This section is not a starred section, but you can check the entity setup area at any time to see if this information is still accurate and make any needed updates. 4E is hardware and mailing. This is a starred item, so you can enter this information early. The UAN hardware address is the address where the state-owned hardware lives. If you have a laptop that you take to several locations, you'll want to use the location that is at most of the time. At the top, it's asking for you to verify the hardware tags. This is required because this is how we track inventory. If the numbers on the right side under the From UAN records are correct, then you can check the boxes that state My Auditor tag matches UAN records or My Computer tag matches UAN records, and that will automatically fill in the left side. If they do not match, you will manually enter them in on the left side under User Entry. 4F is next year's Fiscal Officer and Details section. If you are planning to be the fiscal officer in 2025, then you will select the same as current fiscal officer option. If you are planning to leave the fiscal officer position and there has already been someone hired or appointed to take your position, select newly elected appointed fiscal officer option and fill out the information. The bottom sections will require for you to acknowledge that you have read and understand that upon closing the year 2024, the information from 2017 will be removed from UAN. The UAN software only maintains 7 years of reporting for clients. You will want to print any of the reports that you do not have printed before you close the year. For more information on how to print prior year reports, you can refer to the Year-End Procedures Manual. 4G is carryover purchase orders and blanket certificates. If you check this box stating that you acknowledge the effect that any carryover items will have on the 2025 budget before closing the year, this will not stay checked. You can review it each time you work on the checklist so you can see what items are still there and check it each time. But when you close out of the checklist, the check mark will go away. This is because things can change as you are working on completing everything for year end. As mentioned earlier, you will want to reduce or close any purchase orders that do not need to be open. Closing a purchase order after you close your year will not increase the year's available resources until 2026. You can either review the purchase orders each time you work on your year-end checklist and check the box, or you can wait and do it once you are able to close the year. 4H, the same is true with carryover withholdings. The acknowledgement box will not stay checked. You will have withholdings that should carry over into 2024, but you might have some that need dealt with before you close the year. This can be confusing with the ability to work in both years. If you paid a withholding from December while working in 2025, it's still going to show up on the 2024 list as unpaid. That's correct, because it needs to carry over to the new year to pay at the correct time. You should only expect to see what you're paying in January in the total unpaid column. The far right column is the employee share carryover encumbrance. This will come out of your 2024 budget because the post date of your payroll was in 2024. And the middle column is the employer share carryover encumbrance. The employer share encumbrance does not come out of your 2024 budget unless you pay it in 2024 because it'll be based off your withholding payment post date. If your withholding post date is in 2025, the employer share withholdings will come out of your 2025 budget. Your December bank reconciliation, I think this has been mentioned twice already, but it's definitely very important. The date for your final bank reconciliation has to be December 31st. Okay, I'm going to go ahead and hand you off to Alex for the next section.
All right, thanks, Lauren. Appreciate it. So let's go here. And going through the AFR fund utility on 4C. So the question here is, when do you need to move forward on fund mapping? On the very bottom, if you're filing regulatory, some of you may need to map, some of you may not. And the general theme of this section is going to be UAN support can't tell you what you need to map except for what we cover next. So you're going to want to talk to local government services, but for the majority of regulatory filers, you won't need to map. If you file ACBO in the past, then you may need to map a few things, and you'll want to check on what you did in the prior year and also check with local government services if needed. So web gap filing, tiny percent of UAN users do file web gap, and it's good info, but it's not required for them. It was more of a legacy holdover with the mapping. Custodial funds, we're going to cover those. There's one AFR setting there, and then we're going to cover under the fund mapping, fairly uncommon, but sometimes required. If you're not sure, you'd want to contact local government services on that one because UAN can't tell you aside from unclaimed monies funds, which we'll go over next year. To get to the fund mapping, you'll want to go to General, Reports and Statements, Year End, and then the AFR Fund Utility. So, as on many UAN screens, you'll get a pop-up message, and we just want you to wait on this one right away. Usually, we want you to read those before you proceed, but on this one, we're going to put a pin in it for a little bit. Moving forward to the AFR Fund Mapping Utility. In our case, we're going to talk about reviewing for custodial funds if you have any. So in this example, we do have the unclaimed money fund, and it's listed as custodial here. So what we're going to do is check the box on that one. And then we're going to select how we're filing. So in our example, it's going to be regulatory, and we'll hit next here. So here's what the fund utility will look like. It'll give you the balance in the top left. It'll give you the category. In this case, it's custodial, and where it is currently under other custodial. From there, you're going to notice that the column headings on the AFR combined statement for proprietary and fiduciary funds. Well, what do we mean by that? Your AFR funds for the unclaimed money fund will be shifted to show this balance under the general fund. So in general, we can't help you with what funds need to be mapped. That's more of an LGS question. So again, recommend you calling there. But in this case, LGS did give us the okay to walk everybody through. If you have an unclaimed money fund, here's how you're going to map it. So on the top right, you'll see the mapping section, and it'll show you mapped or not mapped. And this is where you can map your funds. Not like this kind of map playing the Buckeyes here. What we want is mapping like this, where on your AFR report, the general fund is going to consume the unclaimed money fund, but it's just not quite as scary as that. The fund gets consumed by another one for AFR purposes, like we said. So the big question, to map or not to map, you got to ask yourself, are you doing this for the AFR report? Mapping won't change either fund in UIN on the day-to-day reports or the balances. It's only for the AFR report. And you may not need to map any funds. If you don't have an unclaimed fund and you file regulatory, UIN support can't help you with that again, but LGS can. So you'd want to reach out to them there for that one. And then you'll see the legacy column here for mapping required. That's kind of a holdover from the system. That's not telling you that no mapping is required. It's just telling you that no mapping is required in UIN to close out the year. So some funds may still be required to have mapping, just like we went over. Unclaimed money, you'll have to map to the general fund. So just a reminder, don't let this column fool you, mapping required. That's just telling you you can close the software with it not mapped. So our mapping example, unclaimed money is going to general. You're going to select both because it's LGS approved. And then you're going to click edit and regulatory. So this is what it's going to look like. First, I want you to note in the bottom left, we've got one of two here. So just like anytime you select multiples in UIN, you get the toggle switch in the bottom left there to go to the different funds. So in the top left, we've got our general fund total. There's our balance before mapping and our general fund. We click over to the next fund, and here's our unclaimed money fund. And you see the balance in the top left here, and map to. So currently not map is selected. We're going to map it to the general fund. So you hit map to, and then general. You'll see the general fund pull in there. It's fund 1000, and poof, the bottom goes away on the mapped fund. So that's one way to know you've completed it. And moving over, click save, and it sends the 1752 in this example over to the general fund. And again, you're not transferring any money. This is just for your AFR reports. So the general fund, you'll see the increased balance where it's now completed the eating up of the unclaimed money funds. And here's our little example again of the general fund eating the smaller fish here. So don't be worried about mapping funds. A lot of you won't have to if you're filing regulatory, but if you have the unclaimed money fund, LGS approved, go ahead and map that to the general fund. Very easy to see in that example, and it'll show your year-end report where the total will now be shown under the general fund. Back to our trivia here, we got a little break. So we've got tourist attractions around Ohio. So my question is, how many tourists visited Ohio in 2023? So again, consider on your own. Perfectly fine. Shout the answers out in your office. Go crazy with it. But I didn't list any polls. So moving on, after you take your best guess, in the year 2023, Ohio had 238 million visits. 190 million were day visits, and 48 million were overnight stays. Some wonderful tourist attractions to do in Ohio, as listed on ohio.org under travel, things to do, destinations. Cuyahoga County gets on the board with Cleveland's Hard Rock Hall of Fame. Montgomery County and Dayton gets on the board here with the National Museum for the Air Force, which is phenomenal. Erie County has Sandusky Point for all the thrill seekers out there who love roller coasters. And in Hamilton County, we have Cincinnati with the CMC Cincinnati Museum Center, which is the old Union Terminal. And it is now 3 museums put together. Pretty great to see that one. Let's see if we have any questions real quick before we jump into the manual input section. Okay, so we have one reminder here, good reminder. You don't want to work on the December bank rec until you're finished with December. So that's in the best practices and in the year-end procedures. So remember, as an overall reminder, your best practices is the short form checklist that you need to go through to make sure you close out the year successfully. And the year-end procedures is like your long manual. The procedures is going to be over 100 pages, but it goes in depth. So if you get stuck on any section under your best practices, you'd refer to the year-end procedures, and you would get the step-by-step instructions on how to get through that point. So great reminder for your December bank rec. Make sure all of your December transactions are in before you tackle that and close that one out. If you know that you're done with your payroll and you've paid all your employees and vendors by late December and you're trying to go on an early vacation, you could start your bank rec and then advance it to 12/31. But you want to make sure everything is accurate before you close it out so you don't have to void it and redo that December bank rec. If you do have to void the December bank rec, then you have to restart the process all over again. It doesn't just back you up a step. You'd have to clear everything, and it's quite a bit of work there. All right, so moving on, we're going to go into the manual input forms on the next section. So again, similar to fund mapping, not everyone's going to have to do these, but for those who do, we'll cover how to get them done here. So these are all going to be for your annual financial statements, AFR reports. So we'll go back here. So your manual input forms are going to be under general reports and statements, and then year end. And then it's the very bottom section. We have 4, the cash and assets, cash reconciliation, schedule of debt service, and schedule of outstanding debt. So cash reconciliation, it's a real quick manual input report. You put in anything that you don't have already listed in UAN. So debt accounts, payroll accounts, any kind of balances you're ending the year with that aren't accounted for already in at year end. If they're not in UAN, then you'd enter those manually here. If they're already in UAN and you don't have any of these outside accounts, then you don't need to fill out this report. Very simple, and that's going to be on all of these. Might not be necessary, but your data entry totals would go in there. If you do have to fill it out, this is what your cash reconciliation report is going to look like, and it's going to have any of the information you have to manually put in at the end. It'll be included right here on the year-end AFR report for you. Next, we'll go over cash and assets not recorded, as well as the 2 debt sections. And again, only going to complete these if they apply to you. If you do work on any of these manual input forms, you want to print a copy for your record. You could get a public records request for them, and they are part of your financial statements. So you want to print out a copy just to have on your end so you have a record. Again, if you add these to UAN, they're only for year-end purposes, and you don't need to add them anywhere else in UAN. When you submit your AFR submission to the Hinkle system with all your reports and Hinkle notes, UAN automatically transmits these to if you fill them out. If you don't have these, then you can skip right over those. Cash and assets not recorded. So very simple. If you have something that's not in UAN, but it should be included on your year end, you would enter it right here. You'd put in what it is, where it is, and the amount. If you have any questions about that, what should be recorded that you don't have included in UAN, then you'd want to talk to an auditor or local government services. Next section, we'll go over the 2 debt reports, and these get a little tricky. So schedule of debt service and schedule of outstanding debt. What's the difference? So if you have debt, the schedule of debt service is very simple. It's the debt that was paid this year. The schedule of outstanding debt is projecting debt that will be paid going forward. And to note on this one, you would pull up an Excel file and you would project out how your debt's going to be paid over the next however many years of debt you have. In this example, we'll say we have 15 years of debt. So for this report, the first 5 years need to be individually entered. After that, you can enter bulk reports for 5 years. So years 5 through 10 would be 1 more entry, and years 10 through 15 would be 1 more entry. So we'll walk through that a little bit. First, the schedule of outstanding debt. We'll hit add, and here's what it's going to look like. You'll see year issued, so that's when the debt was first issued. In our example here, we'll have a purchase of a truck. It was issued in 2023. Interest rate we entered in at 1.9%, pretty good rate. The balance as of January 1st, so we would be looking at this. This would be the balance of January 1st of 2024. We paid off or retired $5,000 worth of that debt, and it'll give us the total at the end of the year, which was $20,000. So simple, it's just how much of your debt was paid off this year. You put in your interest rate, starting balance, and how much was paid, and it'll calculate out how much is left. Hit save on that one, and we'll enter a second one. Any debt would have to be individually entered. So for this one, we've got debt that we paid off for stormwater improvements. The debt was issued in the year of 2024 in our example here. Put in your interest rate, what your balance was on January 1st, how much was issued, and how much was retired. Once these are done, same as previous reports, you would print for your records. And here's an example of what the outstanding debt report would look like. It would give both of your projects here, and it would list out what you just entered. All right, so schedule of debt service, slightly different. So this is the one where you're servicing your debt over what time frame. You want to fill out all of this in an Excel file and break it down for yourself. And this is where you're going to have to go year by year for the first 5 years. Years 5 through 10 will be 1 more section, and any after that you can put in 5-year increments. So here's an example. 2025 principal and interest calculates out. Here's 26, 7, 8, and 9 all manually listed out there. So on the right, it's giving your totals for every year, and on the left is breaking down your yearly amounts. On the left here, we've got our first 5-year summary jumping out to 2034, and we've summarized the principal and interest, and it continues our reporting on the right side over that whole time period. So now we're up to 10 years. We could do it again. Now we're up to 15 years with another 5-year summary. All right, so you will print that report for your records. You'll select all the years, print, and here's a copy of what that report's going to look like. Again, if you don't have debt, then you'll be skipping over these 2 reports. But if you do, that's how you're going to have to fill them out. Before moving on, we just have a note that if you're sending in questions now, they're getting answered in the chat, so might not necessarily go over all questions at the end of the section. We're trying to answer as much as we can, and we're pushing any relevant answers to the whole crowd, or if it's a specific question with a specific answer, we'll just send you that back. Okay, so for AFR statements, everybody's favorite is to prepare their AFR statements. I know everybody loves it. Those are done outside of UAN, and well, your AFR notes are done outside of UAN, but we do have some reports that could help you here. So under general reports and statements, if you go to year end and then regulatory statements, you'll hit the drop down menu here, and you'll save these reports. you'll select your report to print. And if you get a message that says no data to report, that means the report doesn't apply to you. So if you don't have proprietary or fiduciary accounts, then you won't get that combining statement. You would get the governmental combining statement up top. Also, your AFR statements, there's one of the reports in there that covers that one. So we'll back up real quick just to show you. We have a larger section on it later, but at the very bottom you have budgetary notes, information export. So that is where you can pull that from UAN. So back to our AFR statements. First, we'll do another round of trivia here. This one's going to be Ohio State Parks. So our question is, how many state parks does Ohio have? Beautiful Ohio State Park passport book here. Answer on that is 76 state parks around Ohio. So plenty for everyone and a lot of beautiful scenery out there. And keeping with that, we have some historic sites to see. In Vinton County, we have the old Belgian coke oven ruins. Plenty still standing there. An interesting reminder of the former practice in the area. On the right side, we have Caesars Creek Pioneer Village, which is in Warren County, a living history museum. On the left, we have the Marblehead Lighthouse from Ottawa County. It is the Great Lakes' oldest lighthouse in continuous operation. And on the bottom right, we have the Wolf Creek Pine Run Grist Mill in Ashland County, constructed in 1831. So plenty of amazing sites out there in Ohio. One more thing, we have our 2025 winners for the Ohio State Park Contest. So ODNR does some phenomenal pictures, and they're all submitted by regular people. So on the left side, we've got the Ohio first place state park winner, and it happens to be the 75th anniversary. Beautiful shot there. Second place, that looks like it's out of, it's the Stairway to Heaven, also beautiful. We have a People's Choice, which is an old school public phone in the bottom left, and then another People's Choice, Walking in a Winter Wonderland, beautiful trees and deer running around there. And we know what kind of deer that is, whitetail. All right, so moving on with our checklist, we're getting into the AFR notes. So you have your AFR reports, those are your annual statements, we went over those. Those are the reports UAN will generate. Your AFR notes are the ones you have to create or you have them outsourced. But either way, you have to add those notes because they're external and you add them to UAN. We've got a great training video out there from local government services under uanlink.ohioauditor.gov. If you go under training, then year end, you'll see notes to annual financial statements, and we have a LGS presentation video there that highlights how to fill out those notes. LGS also provides you with a shell for those reports, and I'll show you where to grab that in a second. But first, going back, under General Reports and Statements, year-end, AFR Regulatory Statements, we'll highlight that budgetary notes information export that I pointed out earlier. This is going to be a very useful report for completing your year-end notes for the footnotes in that AFR Hinkle report, AFR report. People call it a few different things. It's your AFR notes. So you're going to need that report to fill that one out. On the right side, we have an example of the sample notes that Local Government Services puts out every year, and they highlight any changes for the year on the document, so very helpful. I know a lot of people save down last year's, they change the dates, change the information, and then they get a jump start on that. So if you're going to do that, make sure you add in any changes that were highlighted for this year's document, or the document typically comes out to mid to late December. Just download your new one, and you could edit those Word documents to include any of your personal information from the UAN reports. And then once that's done, you need to save this as a PDF file, and we'll go into uploading it into UAN. But just a reminder, when you download the document, it's a Word document. To export it and upload it into UAN, it needs to be a PDF file. And then UAN will submit that for you into the Hinkle system, and we'll get you all taken care of there. So downloading that template for your notes, you're going to go to the Auditor of State's website under Local Government Services, and then Reference Materials. From there, you're going to click on Financial Statements and Shells, Footnotes, and click on Regulatory if you're filing that way. Most folks are. And here's an example of townships, villages, library will be there too. And you just click on the notes for your section. It'll also tell you when it's been updated. So you want to make sure you're getting the newest one. And typically, like I said, they update those in mid to late December. So you want to get the 24 document. From there, once you fill it out, you have to upload it to UAN. So you'll go to General Reports and Statements, Year-End, AFR Notes and Documents. And you get this little screen. You'll hit Add and then Browse. So you're going to browse for that PDF file only. It says it right there in bold. Got to make sure it's just a PDF and you switched it from Word. If you need help with that, give us a call at UAN Support. Once you browse, you'll get your File Explorer. You'll grab your 2024 notes file and open that. And then you're going to click Save. And you want to verify your AFR notes. If you don't submit these, you're not going to have a full year-end submitted. Hinkle System's going to reach out and let you know you're missing your notes, so your year-end is incomplete, and you don't want to run into that issue. So we need to verify what we have here. You're going to hit Display on the notes document you just saved down, the PDF. And you want to make sure you didn't just upload a vacation photo of the family. You want to make sure it's actually your notes document. So let's try that again. And this is an example of what it would look like for the Buckeye Township. Notes document saved as a PDF with all the relevant information pulled from that UAN report and updated for the year. Another thing to mention is for the notes document section, and I'll show you that slide next. We'll jump forward real quick. 4C in the top right here says Notes and Documents Files 1. Don't overload this section. It needs to be just your AFR notes file PDF. If you're filing regulatory, so you just put in the one file, you'll get the green check mark and move forward. If you're filing anything else, then you might have to save down some files, but most of our audience is filing AFR regulatory, and again, that would just be that one file that we saved down for the notes. All right, let's see. So we've got another trivia section. Towns that go all out for Ohio holidays. And our question here is, where in Ohio is the house from A Christmas Story? Very famous. Sadly, they changed it to Indiana, but it was actually done in Ohio. Who knows? It's coming up on that time of year. Do we know where that one's from? That one is in Cleveland, Ohio, and it is now a museum. So feel free to tour that from the for the holidays with the family. Excellent thing to do. And we did get one question, and I was asked, do I know what is Ohio's newest state park? I actually did not know that answer. So that was a good one. I appreciate it. We'll have to look up that one, and I'll see if I can get that one for you before the presentation wraps. Very good one. If you know it, Roger, feel free to educate me, and we could pass that one along. Appreciate it, guys. Oh, John's here with the save. It looks like the newest park, state park for Ohio was the Great Council State Park. Huh? And it is in, oh, okay, in 2021. So pretty new, pretty interesting. From ohio.org, travel inspiration. We've got some charming towns that go all out for the holidays here. We've got the Guernsey County Courthouse in Cambridge. Beautiful light show on that one. Staying in Guernsey County, we have the Salt Fork Park Lodge. Looks very nice there, and they have plenty of hiking trails and a craft show. Out of Noble County, we've got Caldwell. We're checking in here. It was a beautiful Christmas village, and good to check out Caldwell and Zanesville in the area. They have great Christmas attractions. And last, we have Marietta in Washington County. I don't know if Lauren's definitely in that tree lighting picture, but she does love Marietta. So beautiful thing to check out there. Looks like a packed town square. All right, moving on and closing out the year here. And we're also closing in on our 2 o'clock break. So we're going to get through this section and we'll take our little break here. So closing out the year, going to general maintenance year end and the year end checklist. You'll click your current year and you're going to start to verify everything on the checklist here. So I know we've gone over it a few times, but we do need to hammer this point home. On this screen, you'll see for 4G, open purchase orders, you have to click I acknowledge. If you leave this screen and close out the checklist, you'll have to acknowledge every single time because changes could be made to your open purchase orders. You want to be sure that only purchase orders or blanket certificates that you need to carry over are being carried over. You don't want to carry over anything extra because that could lead to major budget problems. If, for example, you were carrying over a very large amount, if that was closed in the new year, you wouldn't be able to budget those funds again in 2025. So keep in mind, dollars can only go into 24's budget or 25 budget, but those dollars can't be added to both budgets. So if you're carrying over a PO, it needs to just go to that one vendor, and you want to use that full amount. So reduce any purchase orders down to exactly what you're looking to spend. So that bill comes in and you can take care of it. If you have a large expense that you need to carry over, I would contact local government services to find out the best way to handle that. Maybe you can close that PO and start another one in 25. Maybe you can't. You want to double check with them for compliance purposes. But people have carried over purchase orders, accidentally closed it in the following year, and then you can't get that money back, and it sits in a reserve for encumbrance until the next year. So if you were to carry over a 24 purchase order into 25, say you close it on accident, it cannot be added to 25's budget. You can't use that money again until 2026. So be very careful with your carryover purchase orders. You want to trust but verify. So in the top right-hand corner, you want to make sure that number is exactly what you're carrying over. So in our example here, $5,020, that's exactly what we're looking for. And you want to make sure that's not, $100,000 or something else that you just forgot to close out purchase orders for. So on the purchase orders, anything with a $0 balance is going to be automatically closed, but anything with a balance you could potentially carry over. So please go through your purchase orders very carefully, close out anything that you don't need to pay off in early next year, and then make sure you're only carrying over exactly what you need to be paying in the following year. Carrying over your withholdings. So we went over this a little bit earlier too. You have to click I acknowledge on this slide, same as the carryover purchase orders. And we have the unpaid employee share would be a carryover from the 24 budget, and the carryover employer share that would come out of the 2025 budget, because if it's not paid in 24 and if it's paid in 25, that gets encumbered when the actual payment gets put through. So if you're encumbering in 25, you need to have your 25 budget in place first. So again, make sure these are exactly what you expect to carry over. Typically, you can pay most of these in late December if your payroll is done, and you might just be carrying over like your OPERS and OP&F payments, whereas other things you could take care of in December. So same as the last, you want to verify that the carryover withholdings number is in the correct amount that you're looking for. Now, once that's done, you'll be able to close out the year. So on the bottom left, when you're on the Finish tab, you'll click Close 2024. You're going to click I affirm that you've read this, and then you can continue to close out. So you want to make sure that when you get to this point, everything has been gone through on the checklist and all your 2024 figures are finalized, because as you get this pop-up here, you're closing out temporary mode. You'll no longer be able to enter 2024 transactions. Now, there's no prize for closing out the year early, so it's better to be sure you're doing it at the right time and you're not rushing things, because you don't want to leave something out for 2024. But once you're ready and you close out, we'll walk you through the steps here. So you'd click OK on that one. Then you get another pop-up. Are you really sure you're done? Because you're going to close 24 and it'll be irreversible. Click OK on that one. And you're going to go through 3 saving of different backups. First one will be your last backup of 2024. So to save a backup, it's the normal backup process. You could save to a CD, flash drive, or network drive. Then click Start. If your computer were to freeze here or crash, during this process, UAN support can help get you back up and running. If it were to freeze here, we would go back into 2024, do a normal backup and save that, and then temporary mode would close. If it were to close temporary mode, then it would push you into 25, and you would just save your manual backup there, and you'd resubmit 24's year-end documents, which would be a separate step. But hopefully you get through the backups without any kind of freezing or crashing. If you do, again, don't worry. Call UAN support. We'll walk you through it. Second backup in our example here, everything went right. This is going to be the first backup of 2025. So you'd select your backup, hit Start. And moving on to the third backup, this is where you're doing your internet submission to the Hinkle system. So you'd select the internet submission option on the top right. Then you'd hit Start. And then it would submit to the Hinkle system, and you will get a pop-up that says you've been successfully submitted, and you got to give it a couple days so they can review the documents. That will then update on your eServices account. You'll be able to see your status there submitted also in a couple days. If you're running any issues or have questions closing out the year, again, give UAN a call. But at this point, once your third backup is completed, you have closed out the year, and you've taken care of the entire checklist. Going back to the towns that go all out for the holidays, another question we have is, how many stops are on the 2024 Ohio Holiday Lights Trail? I'm going to be honest, there are some great things out there on the ohio.gov website. Ohio truly is the heart of it all. Didn't even know we had an Ohio Holiday Lights Trail. Didn't know some counties have different walking trails and covered bridge trails. All kinds of great things out there, but Holiday Lights Trail is our question here. So how many stops? Let's find out. There are 73 stops. It's broken down into different regions, just like audit and local government services. We've got our Northeast, Northwest, Central, Southeast, and Southwest. So there should be something out there for everyone. Great things to see here. And that's on ohio.org, O Holiday Lights Trail. Back to the charming towns that go all out for the holidays, because there were quite a lot. We've got Gallia County. Gallipolis is in lights, and it was in the 2022 Today Show featured as the merriest Main Street. And it's on Ohio's Light Trail, so you're going to want to check that out. We also have a shot here from Athens in Athens County, home of the Ohio University, not the Ohio State University. So, a little competition between those two areas. But beautiful downtown shopping district at Christmas time at night. In Fairfield, we've got Lancaster, very nice holiday spirit trail there. You can walk around and check out all the houses decorated. And in Licking County, we have Granville, beautiful tree, and they've got a candlelight walk there too. And we've got a couple more in Union County. We do have Marysville. So John will be happy about that. There is a Christmas walk and tree lighting in the historic Uptown Marysville. We'll see if we can talk to John for some recommendations there, where to eat or drink after. In Warren County, Lebanon, you could jump on the Polar Express. Looks pretty awesome there. Warren County in Waynesville, we have the Renaissance Festival. They stay busy in the wintertime with the Yuletide Village. So you might think they're just fall, but they actually go well into December. And in Jefferson County, we have Steubenville. They have the largest collection of life-size nutcrackers with 200 or more on display. And they also have the historic Fort Steuben decorated for Christmas. So you can get 2 for 1 out of that trip. So very interesting stuff.
Of course, for the end of the day, we're bringing it on home here with the I'm told, yeah, it looks like a chipmunk. I know it was supposed to be a squirrel, but we couldn't find a skateboarding squirrel. So good enough. We're ready to bring the webinar. We're not bringing it to a close. I was about to say that. We've got a little bit of a couple pages left, our year-end best practices, and I'll be running you all the way through that till the end. So if you look at the bottom of page 6, that's where we're picking up, and the best practices steps after closing the fiscal year 2024. But first, a question, trivia. What squirrel is not native to Ohio? What is it? The black squirrel. It's the black squirrel. Yes, I'm an expert on this, as you can tell. It's the black squirrel. I probably would have guessed the flying squirrel like most of you, or half of you anyways. So that was a tough one. We left the tough one for the end of the day. All right. Moving forward, steps after closing 2024. Notice, so in our little training world, Alex went through all the closing steps, did all the backups, and come back from break, and we go to log in, and looky here, there's no 2024 or 2025 button. You can now log into the new year. That's it. So we go ahead and log in. And the first thing we encourage you to do, just in case there was a technical problem with the close, is to print 2 copies of this report, the cash summary by fund. You're going to print them for different years, different dates. So you go to accounting, reports to statements, fund reports. In that long list, right in the middle, you'll find cash summary by fund. It's really the best one to print for this purpose. So you're going to do a comparison. And what we want you to compare is 2025's January cash summary by fund to 2024. So you got to switch the year on that and print it for 2024. Don't worry, it's not 100 pages. It's just a 1-page report for each. And that will show you the year ending cash. It shows you other information, but you'll see the December 31st cash balance for each of your funds to compare to the January 1st cash balance for each of those funds. And you want to make sure that there was no technical problem with the year-end close. They should be identical if you think about it, right? End of year, very beginning of the year, with no special activity in the beginning of the first day of the year. And compare it. If all is well, then you can move on. If there is a problem, then you probably want to give UAN a call right away, make sure there wasn't any technical problems. Now, even if they don't match, be honest with you, most of the time it's explainable. Maybe that you had some transactions that occurred right on January 1st. Maybe not that you were camping out in the office on New Year's Day, but perhaps you backdated electronic payment that came in or withdrawal. And so that kind of thing can affect it. But if you do this right away, well, I'll just leave it at that and we'll move on. All right, our next topic in the checklist, if you turn the page 7 is, well, the certificate of all that mumbo jumbo. It's really the year-end balance certificate is what we like to call it here. And that is technically what you should submit right now at this point. If you look at If you look at page 7, of course, these are steps for after closing the year. Technically, this would be the best time to create your year-end balance certificate and submit it after you close the year, because only then are you absolutely sure that you won't have any adjustments to 2024. And therefore, your cash balances for each fund are absolutely final. However, we understand that you may have 2024 all wrapped up, except for maybe some debt schedules. Maybe you're waiting on the bank to get you some information, or for the schedule for upcoming years, or notes on annual financial statements. You're kind of working on fixing those up, but you've really done your bank reconciliation for December 31st and everything closed. So you need that to get that year-end balance certificate to the county auditor, and sometimes they have pretty strict deadlines for that to move forward with a lot of other things. So we understand that you may not actually get to this point like we are in the best practices before creating this year-end balance certificate. So that's okay, but make sure that you log into 2025's working year to create the year-end balance certificate for the ending balances of 2024. Very important. Otherwise, if you don't notice correctly, you'll be printing the wrong year-end balance certificate, because it always looks back at the previous year when you use this function. So let me show you where to find that. We throw that off at the beaten path, just like we did at the beginning of the day when I talked about financial worksheets. You'll find this under the tax budget software, under budget transactions. And because it's something that kind of goes to the county auditor as well, we throw in there the year-end balance certificate. This is optional. You don't have to use ours, but why not? Most county auditors accept this, and it's pretty easy to use. So once you open that area, then you'll see that, you notice on mine it says year 2025 because I'm logged into that working year, or the year's closed. I'm in the new year. But right below that in light color, it says balances as of December 31st, 2024. All right. So we'll click the add button, and that will open up the add year-end balance certificates form. You can name it whatever you like. 2025 makes the most sense, according to our little monster friend there. Whatever you name it, doesn't matter. You want to select all your funds. Well, maybe. If you have something like UAN, where in our UAN Buckeye Township, you've got an unclaimed monies fund, which is a custodial fund, then you want to know how your UAN software is set up to handle this. Our default setting, if nothing's been changed, is that custodial funds are not really part of your government's budget. And that's what the Auditor State's Office said should be the fallback. That's the default in UAN. There would be unusual reasons why you would include this in your budget, a custodial fund for your entity. So you want to check this setting under Entity Setup, General Maintenance Entity Setup. If you're a newer fiscal officer and you don't know how that has been managed in the past, then you can double check that. But in most cases, it's probably set to not budgeted. For those custodial fund types, or maybe in some very other unusual circumstances, you might unselect a fund that really doesn't belong on the year-end balance certificate. That is really not a question. There's other funds, not a question for UAN whether you wouldn't include them. But one other example I could think of is maybe if you had a fund that has had a zero balance for many years now and you just never got rid of it, and it has had no activity, no budget for several years, and no reason to keep it, your county auditor may not want to see that year after year, so you could unselect that. We'll return to that topic really at the very end of this presentation, because it has relevance to one other thing. But yeah, select what you need, which is most likely all of them in most cases, and then save that. And what's great about this is it does the work for you. You're at now, if you do it at this step in the process, if you at least know that you've done your 1231 bank rec, that won't be voided. You don't have any adjustments to do to the 2024. Then you can print the year-end balance certificate. You can just usually just add, save, and then print it. If you haven't followed the year-end balances, year-end best practice exactly like we have, then keep in mind that the one thing on this certificate that doesn't have to do with 2024 or carrying over encumbrances or something related to 2024's budget is the last couple columns, where the second to last column on this report, which I know you can't see that, which shows your revenue budget for 2025. If you hadn't completed a revenue budget, chose not to do that earlier, then you would have to fill out that part of the form manually, just for the grand total for each fund. So that's the one thing you might have to fill out if you just chose not to complete the revenue budget right away before creating this, and before entering. If you had chosen not to enter the revenue budget in UAN 2025 yet. So that would be the one thing. So you can submit this to your county auditor. They need your year-end balances for 2024 so that they can create the, go ahead and click and print that out. And most counties will accept that. You can keep a copy for your records. Make sure you do that, because your auditor will want to see that. Your state auditor, a couple years from now when they're auditing, will want to see that. And then send a copy to your county auditor. That way they can start processing your amended certificate for 2025, right? Because you estimated your end of 2024 balances 6 months ago, and now you've got to update the county auditor with the actual ending balances for 2024. And and they'll use that in part to create your amended certificate. Now, bear in mind, and I'll bring this up again, that some county auditors will adjust more than just your year-end or year-end or year-begin balances, I should say, for 2025. They may actually look at your revenue and say, hey, you know, we're going to reduce this by what was on your official certificate, maybe by a few percentage points or something like that, if they don't agree with that that estimate that was done 6 months ago by your entity. So each county is different. Be aware of that. That'll be relevant as you once you receive that amended certificate. Top of page 7, meeting annual financial reporting requirements for the Auditor of State. Now, what are the deadlines here? Well, the deadline for this is 60 days after the end of the fiscal year, December 31st. So this year, that means that falls on March 1st. You have to submit your annual financial reports, and that involves closing the year, and either uploading the file by closing the year online, as Alex demonstrated, or by sending the disk. But your filing date equals your received date. In other words, if you mail a disk on March 31st, we're not going to get it. I mean, sorry, on March 1st, we're not going to get it until after that date, and so it'll be late. So you need to mail, if you're mailing a disk, which I hope not too many of you are doing, then you're going to be relying on the post office to get that to us on time, because that is when we consider it. If it gets a week late, that's when the receive date, and you're late. It doesn't matter when it's postmarked. What matters is when it's received at our office. Regarding the file upload, so yeah, we definitely keep that. I mean, we're keeping a very close eye on it on February 28th, and March 1st to get all of the files that are uploaded on those dates. And once we receive those on our server, then we consider that your filing date, as long as you get that filed by March 1st. However, as I mentioned before, incomplete filings made on time are not complete. I don't know if Alex had his demonstration with the vacation picture. I always love a few of examples. This happened a couple times over the years where someone has scanned in a piece of paper and put it into UAN for the notes, saying that all the paper says is, I'll send you my notes later. And then they submit, you know who you are, and I'm not naming names or anything, and then they submit their filing to UAN. So they can get it in on time, but you know what? That's considered incomplete because your notes are part of your statements, and the auditor state considers that part of it. So they can't come later. It's part of your submission. Any kind of incomplete amount, whether it's your schedule of debt, service is not filled out, if you have debt going forward, whatever the case may be, make sure that's complete. That's why we say there's no awards for rushing it and trying to getting that all in on the first week of January if you don't have it all complete. Well, if you do get close to the deadline and you submit by internet, make sure you verify your filing status because things can go wrong with those internet uploads. Unfortunately, the message you get when you do an internet submission, the very end of it in UAN, you should get a message saying submission complete or successful. And it's a little bit too confident of a confirmation message because all that the software can detect is that a file has left the UAN computer. That's it. Something can go wrong out there in cyberspace, and it could crash before into cyberland there, and it could crash and not fully be submitted to the auditor state's office on the servers, on the computer servers there. So that's why we tell you to check your e-services account and see if on the Hinkle system and see if you get a status saying that it's submitted successfully. That's what you want to look at to confirm. Now, again, if you're down to the wire, hopefully not on February 28th or March 1st, then you can check a few days later. We will honor it if it's submitted. It might not automatically update the filing status that day if you submit it that late. I encourage you to get it a little bit earlier so that we can you can be sure that you don't pass that deadline. And by golly, once you get a success message, you can do the happy dance. I was really looking for a dancing squirrel, but I could not find it. So we'll just have to do with Betty here. She's very happy that she got that confirmation that it's submitted successfully. Few other points about this. The Hinkle system file will only contain documents required for the Hinkle system. A lot of new folks get confused by this because when they go to check e-services, they say, wow, there's a lot more, you know, where's my schedule of debt services, or where's this or that. It's only showing a limited amount of information when I look at the Hinkle system and see the filing. It must be incomplete. And that, you know, what gives here? Well, the Hinkle system is, if you've got a status say successful and you know that you included everything you need in that submission, then you're okay. The Hinkle system only shows a limited amount of information on that website. When your auditor, a couple years from now, let's say, when your auditor's auditing 2024, UAN provides software for them so they can pull up all of your year-to-date reports and all of your annual financial statements and everything included relevant to them to look at your transactions activity for that year. So be rest assured, a successful submission, and as long as you've had that included, all the notes and everything included before you submitted your file, you should be in good shape. So once you do that, that's the time. Once you check e-files and see that it's been submitted successfully, then you can publish a notice in your in your local paper or whatever is local news in your area, letting you know that your citizens that they can come and request your annual financial reports. Take a look at that for your township, village, or library. Another thing you can do at this point, and this is completely optional, is that you can choose to use UEN to submit your checkbook information to the Treasurer of State's Ohio checkbook system, and that is something that is optional. Ohio, we have through an agreement we have with the Treasurer of State of Ohio. Since we already get your financial information through UEN, it makes it very easy for us to do that. But we do require a couple levels of confirmation and authorization for you to look over to make sure that the information is what you want to submit, and to authorize UEN to submit that year-end data, records of your payments and receipts and so forth, and all of your activity to Ohio checkbook annually. Now, Ohio checkbook, the Treasurer of State does have an option on their website to submit this monthly. UN doesn't provide that because, well, we only receive your data once a year, so it's not possible for us to provide that feature. But this makes it very easy. It's just a matter of going to our website. We've got instructions in the year-end procedures, and basically that will direct you to our website where there's a 7-page document with lots of pictures, kind of like showing you how easy it is and all the steps to confirming through a series of emails and on the website that you authorize UN to do this, and then you'll send it on off to Ohio checkbook. Fairly easy process to get used to doing if that's something you choose to do as local government. Well, you got to print out your year-end reports as well. Don't let the little varmints get to them when you do so. Put them in a safe place, and you'll probably have a big pile like that little guy's got a hold of, because there are, if you look on page 7, wow, it starts halfway, the list of things to print starts halfway through page 7 and continues on to halfway through page 8. There's just a lot required of you to print. We're talking appropriation ledgers, year-to-date, revenue ledgers. These are long documents, and there's just no getting around having this record retention that is required by the Auditor of State. Now, it is possible that you could print this information monthly, and as long as you updated it if there were any adjustments that affected that prior month. So a lot of people just choose to print it all at the end of the year. It's up to you, as long as the data that you print is in the final up to date. This is not your year-end financial. I'm not talking about your year-end financial statements. I'm talking about year-end reports. So in an earlier step in the checklist, we encourage you to print the year-end reports. That's much shorter, abbreviated. The regulatory reports are more of a summary of all of your activity, whereas this is all the detail. You can also, for just about, I'd say, all of our year-to-date reports, there's an option right next to the print button, real close in every report area, to save it as an Adobe PDF file. So you can do an electronic file of all these. I can't say at this point that I've been authorized to tell you guys to just save electronic records. Maybe that's the case, but it's not something that I know of, so or been told by the audit's office that it's permitted. So it's good to have a backup copy with the electronic copy. So I would personally do both. Print out the paper copy, stack it in a file cabinet or box, and put it in a safe place for retention. and the same with having PDFs. A little bit more detail on how to do that is in the year-end procedures manual. Well, this is pretty rare, so we'll kind of move through this quickly. Now, I'm skipping over some of the points in on page 8. If you turn to page 8, after the reports, we've got W-2 and W-3, 1099 information, and we've already gone over that pretty good detail. So in the checklist, you have the option of doing that before or after you close the year. So here's this, we just repeat the same steps if you're going to choose to do that after the year. So we'll skip over most of that, but there is an extra one here about 1095 and 1094 forms. And this has to do with the Affordable Care Act or Obamacare. There are very few UAN customers, I would guess less than 30 or 40, probably less, that we've heard have to really are required to submit this. So what you want to do is evaluate whether you are one of those customers. You can a good clue might be if you took over the job this year, that you could look at previous years. Go to payroll report statement external forms, and then under external forms there is 1095, 1094, and switch the year back to 2023, 2022. See if these have been created, submitted. Check your paper record, see if they've been sent to the IRS. That's a good clue, you know, that if you trust the previous fiscal officer. But we also provide steps under, if you go to this menu and click on the FAQs link that I'm pointing to the slide there, that'll open you to the payroll manual, where we basically in the first page, you can evaluate by following the instructions there whether it applies to you. And as you kind of read through that and read through the websites that it refers you to, you'll be able to determine whether this is something that is relevant to you. Now, Lauren brought this up at the beginning of the day. It's not really new this year. It was actually new last year, but the error system for e-filing is something that it's again one of those things for the few of you that are required to submit the 1095, 1094. You're probably, especially if you're required for this, you're probably going to need to submit it by electronically. And so there's a separate system for this than 1095s, and it requires a separate transmitter control code from the IRS for the AIR system, the Affordable Care Act Information Returns site. So if you haven't registered for that and you find that you need to submit these forms, then you'll have to register for that TCC code in order to be able to do that online. All right, back to this area. So there's the relatively new e-file button that you can use, and the steps have been added to the back end of those instructions. So, you know, go to that same FAQs, but you got to move many pages down to find the e-file instructions, and you can follow those steps if needed. And get moving on if you determine that this is something you need to do and you haven't gotten registered yet, because it does take some time. All right, the last section, and this is after receiving the amended certificate in the middle of page 8. So in our scenario here, we're in January, we've closed the year, we've submitted our year-end balance certificate to the county auditor, we're operating on a temporary appropriation budget, we're operating on revenue budgets that were based on our official certificate of estimated resources, and now we've got the certified 2025 amended certificate of estimated resources, but we want to make sure that that matches up with the data that we have in UAN. So we want to verify. So we're going to compare our amended certificate to a report in UAN is the first step. And this report is found under Accounting Reports and Statements, Budgetary Reports. There's only 2 reports in that list. And the first one you're going to check for revenues is the resources available for appropriation. Select all your funds. It's a 1-page report. It's kind of wide, so I can't show you all of that here. It wouldn't really show up well on the screen. But you're going to look at your total resources available in UEN on that report, be on the right side of the report, for each fund, and that must match your amended certificate total resources available for appropriation on your amended certificate. So those are both on the far right-hand side. If it doesn't match for each fund, well, then you got to dig a little deeper. And so, well, before we go to appropriations, let's come back to that slide and talk about it a bit. So, like I said, if it doesn't match, then you have to dig a little deeper. It could be that, well, it could be that your county auditor has adjusted your revenue budget from the official certificate, from what the totals were for the official certificate. Like I said, county auditors are different. They're going to evaluate based on different criterias in the county, and so that's possible. Just don't skim over it and assume that they're the same. If that's the case, they're in the year-end procedures. It describes how you can correct, update your revenue budget. It could be that you just typed in the revenue budget incorrectly, and so you didn't make corrections for that reason. Again, that's described in the new year accounting procedures in the appendix in the year-end procedures. So make any verify if it's all good, great, move on. If not, you'll dig a little deeper, maybe look at a revenue budget report or revenue status, and then make any corrections or updates as needed to the revenue budget. Well, now that you've verified your amended certificate and everything's good in the UN software, that resources available for appropriations on your amended certificate is what sets the maximum that your board can appropriate. So now there's no reason you can't move forward with the board to adopt a permanent 12-month appropriation budget if they're ready to do that. So there's no need to necessarily, if this is in mid-January to get this amended certificate, if your board's ready to adopt the permanent appropriations, and you prepared a spreadsheet or document for them to do that, you can move forward with that as long as it doesn't exceed your resources available. And you don't have to wait, what I'm saying, until March 31st or whatever for the 3-month period. You can just move forward to adopt that. And once it's adopted or legislated, that's what I mean, then you can come back to the software and replace your temporary appropriations with your permanent appropriation budget. Now, if this is later in the game, if it takes a while, bear in mind that your board is required by, your governing board is required by law to adopt the permanent appropriations before April 1st of each year. So that's your deadline, their deadline to do that. Once they do that, you can enter that in to UEN under accounting, maintenance, appropriation budgets. And you do that right here. And remember this morning, we talked about adding your temporary appropriations. Well, now you're going to replace them with the permanent appropriations by selecting it there. It is a replacement, you're not adding to the 3 months, you're replacing the 3 months with a 12-month budget. So keep that in mind. So we zip through that, save all of that in Training World here. We're all done, but we want to print reports to confirm that what we have in UEN for our permanent appropriations matches what our board has legislated. So to do that, we come back to budgetary reports under accounting reports, statements, budgetary reports. And this time we go to the second report, the comparison of budget and appropriated. And it's almost exactly like the resources report, except for the last 3 columns that I'm showing you on this slide. You're going to look at the final appropriation column. Each line here, each dollar amount here, and each row represents a fund. And so you're looking on at your legislation, the grand total appropriations for each fund in the legislation should match what you have in the software on this report for final appropriation. If it doesn't, maybe you typed something in wrong and you just need to correct that. Yeah, so you want to double. Now, this will not tell you what you typed in wrong at the account code level. So you'll have to, again, dig deeper with either appropriation status report or a appropriation budget report to look at the account code budgets that you entered in and see what you need to fix to bring this to your permanent appropriations to make sure that it matches what was legislated. Once you do that, repeat and rinse to print this report again and confirm that everything is all good. And once that's done, you can move forward. Now, a little explanation about this report. In our example, if you look at the first fund there, we have a variance of 145,000 and some change. That shows us the extra that we chose not to report that our board chose not to appropriate for our resources. That's available maybe later in the year if they decide they want to buy a truck and charge that fund or some other equipment, whatever the case may be. They need to increase appropriations. There's still some wiggle room in their budget to increase it. So if some of these funds, the very next fund, you can see they chose to, for the purpose of budgeting, appropriate 100%. So we have a variance of 0. So your budgeting approaches are different from township to township and local government to local government, but just understand what this report is telling you. If you have a variance, then you have a little room to increase appropriations. Rather, your governing board has room to increase appropriations if needed be in those funds. This is a frequently asked question we get all the time at year end and in January and February. How do I remove old funds? And we are happy to take these calls. Give us a call about this. I can show you what you can look into. But this is really the perfect time to start thinking about this, because there are some key points and key things you have to address when you're going into the new year. So notice that we say immediately after closing 2025, this is when you want to take care of this stuff. There's some prep you can do beforehand, but you'll see that as we go forward. Now, I did notice a typo on Thursday that in our in-person presentation in Columbus that I didn't notice earlier, which is the first step here is we've got, it says 2024 on the slide. You actually want to look at what carried over to 2025. So before some of the base ground level here is, a lot of folks say, well, how do I remove a fund that I don't need anymore? Well, the prerequisite, the basic prerequisite is that the fund must have a 0 carryover balance coming from 2024 and going into 2025. And you can have no transactions for 2025. Okay, so a bit of a typo on a couple points there. The fund cannot have any revenue or appropriation budget entries for the year 2025. So if you inadvertently added a budget, even if you added a revenue budget and then realized, hey, wait a minute, I was adding the wrong fund, and you went back and corrected that in temporary mode while you're doing revenue budgets or on the appropriation side for appropriation budgets, well, that's activity. So unfortunately, you're stuck with that fund for one more year until 2026. So that's why I bring it up now, because in temporary mode, you could be doing that. And so be careful if you've got this fund that you're trying to put an end to, don't accidentally add a revenue or appropriation budget while you're in temporary mode for that fund. The fund also cannot be used in any 2024 created document. So that really gets us to the last point on this slide. the fund needs to be removed from the year-end balance certificate. Remember how I showed you how I removed the unclaimed monies fund in our Buckeye Township example, because we didn't need to report that to the county auditor. Well, if you've got a fund that has had no activity for the past 5 years and the county auditor doesn't care about it, but you just missed that point and you included that fund in your year-end balance certificate when you created it, well, you need to go back to budget transactions year-end balance certificate at this point and edit that, remove from the selection the fund that's not relevant, and then print out that form and then delete the year-end balance certificate form, because it cannot be there in place for this to work, to get rid of that fund. It's not going to hurt anything in the software. The year-end balance certificate does not affect anything in accounting or payroll or anything in your normal operations, so it won't hurt to delete that. And then if you want to, you could add a record of that in UEN without that fund. So you can't have it on a year-end balance certificate for the in the software if you want to remove that fund later. All right, some other considerations or the steps to remove the old funds actually in the software. Now, I'm assuming that there are no links in payroll that would cause a problem with this. We're going to talk about that coming up. So I haven't talked about payroll and how it relates to your fund and account codes for the fund that you'd like to remove. But assuming there's no problem with linkage in payroll, then you go to accounting, maintenance, revenue accounts, and change the status to removable. That's an option. You got active, inactive, and removable. If everything is clear, there's nothing tying down that account code, then select the account codes that you want to remove. Maybe there's some stuff in there that you want to keep that just is inactive. That's fine. Select what you want to remove and hit that remove button, and that'll bring that link to that revenue code for the fund. And then go do the exact same thing for appropriation codes in the appropriation menu, appropriation accounts, change the status removable. It'll show you the account that's removable and remove it. All right. After all that's done, you've untied the strings that are tied to that fund. Go to accounting, maintenance, funds, change the status to removable. If all went well, it'll show up on your removable list now, and you just select it and hit that remove button, and bye-bye old fund that you don't want to see there on reports anymore. If some reason you cannot remove it, you should understand that all of these items, appropriations, revenue accounts, the fund can be deactivated, and when you deactivate them, they will be removed effectively from most reports, the vast majority of reports, and from all maintenance utility menus, so that you can't accidentally add the information to like an appropriation account to a new purchase order, for instance. So if you are stuck with it for another year for whatever reason, then you can at least deactivate them. Well, it might not show up on your removable list because it's tied to something in payroll. And this will really only be relevant for appropriation accounts, because what do you do in payroll? You make payments to employees or to withholdings. So you need to break the link in payroll. And that can be a little bit tricky. The appropriation accounts can be assigned to earnings, to leave benefits, to overtime benefits, or to withholdings, like with the holding employer share benefits, like OPERS, Social Security, OP&F, Medicare. So you've got to remove those account codes from those employees, and these are going to still be linked to that account, even if the employee or if that earning or leave is inactive. So that's what kind of makes it tricky. You have to, well, if deactivated this earning a long time ago, but so I don't see it automatically. You got to break the link if you want to get rid of that fund. And so you can go ahead and page through some of your employees to check this out. And the way to do, if you do identify it easy enough, then you can change the appropriation to a different, more relevant code that is active, that should be used someday, or could be used. Or if, for instance, that's just an old earning, maybe the employee got a promotion and you had added a new earning with a new rate, different fund that needs to be charged for the new earning, let's say, whatever the case may be, but that old inactive earning just isn't relevant anymore, and nor is the appropriation that's associated with. Well, you may be able to just remove the earning, and that's all it takes. It will clear up everything. But if not, then you might have to replace that account code, even if it's inactive. Well, it might be hard to identify. Let's say you got 50 employees with lots of earnings, lots of overtimes. How do you figure out who's got this inactive earning, and which one it's associated with? Well, we've got a report for you, and it's an Excel export. You can get to that under Payroll Reports, Statements, Employee Reports, and export it, the information export, employee information export. And it's a really lengthy Excel file, I'll tell you that. Has lots of those tabbed sheets in Excel. If you've worked with that, it's basically a whole group of sheets in this Excel form. But there are only two that are relevant to our topic today, and that's the earnings account sheet in that report and the withholdings account sheet. And in there, you can look for, use the tools in Excel to filter out and look for the accounts and the funds that you want to get rid of. And of course, doing something in Excel is not going to do anything in the software. This helps you to identify those account codes. Then you can go back and find it'll also show you the employees that, the earnings, withholdings, whatever they are, and the employees that have these set up, whether they're active or inactive. You can go back to take the steps you need in the payroll maintenance employees to either remove the employee, remove the earning, or change if it's an active employee that you're still paying and have other earnings, you could maybe change the account code that is no longer relevant in that employee setup. And that way you can remove the fund. All right, well, that's the end of our topics for the day. I just want to bring up once again that our webinar today is eligible for Fiscal Integrity Act credit. It's all self-reported. We don't provide any kind of certificate of attendance for today. So go to the Auditor State's website for the Fiscal Integrity Act. And sometimes there's a delay in that getting the new year subject. It'll be labeled as something like year-end update 2025 or 2024. And if that's not available today, check back tomorrow or the next few days, and it'll be out on the auditor's website for you to claim your credit for this webinar.